Hello friends, I hope you are all doing good. Welcome to ArP Academy. So in this video, we are going to discuss or we are going to do the marathon of indirect taxation of CA final. Very soon, ArP Academy is going to launch all its final subjects, all the final courses which are available. Okay, so in this video, we'll quickly revise the indirect tax part of your syllabus, which is for 100 marks. Beautiful subject, beautiful paper. So, and this is specifically applicable to those who are writing your examination in November 2024. Okay, so the first topic for our discussion is supply under GST. Section 7 talks about supply under GST. Please note, as you all know, now please note, this video will be useful for majorly for those people who have already done one revision of the paper. Okay, only if you have done one revision of the entire paper, then only this will be useful for you. Only then you will understand what I am trying to say or what I am trying to explain over here. Okay, as you all know that majorly for us, it is the CGST Act which is applicable, as well as the IGST Act, some portions of IGST Act, but majorly CGST Act 2017 is applicable. So wherever we have given section number, wherever a section number is mentioned, not only in this material but also in the examination, that section number which they are referring to will be specifically with respect to which acts are CGST Act. Then there are some sections which we are going to discuss from the IGST law. Wherever that section comes, I'll just tell you that this section is from IGST Act. Now, without wasting any single second, let me straight away start our marathon. The taxable event under GST law is supply of goods or services or both. What do you mean by taxable event, sir? Taxable event is an event because of which you are paying the taxes. It is a reason because of which you are paying the taxes. Why are you paying the taxes, sir? Why are you paying the taxes? Why are you paying GST? You are paying GST because of supply of goods or services. See, you are paying income tax because you are earning income and your income is crossing the basic exemption limit. You are paying customs duty because you are importing any goods or services or if you are importing any goods or exporting any goods. Similarly, the reason for paying GST is supply of goods or services or both. Now, the meaning of that supply is given under section 7 of CGST Act 2017. Now, we are going to see the entire provisions with respect to section 7. What is section 7 talking all about? Section 7 subsection 1 clause A says supply includes all form of supply of goods or services or both, such as sale, transfer, barter, exchange, lease, license, rental, disposal, made or agreed to be made by a person for a consideration in the course or furtherance of business. Meaning what, sir? If I want to call something as a supply as per section 7 subsection 1 clause A, then these 5 elements are required to be present. What are these 5 elements? That supply should be of goods and services, that supply should be made or agreed to be made, that supply should be by a person for a consideration and in the course or furtherance of business. Only if all these 5 conditions or only if all the 5 elements are satisfied, then only I will call a particular activity as a supply as per section 7 subsection 1 clause A. Sir, what do you mean by? So if I want to understand this properly, so these 5 elements are required. Sir, what do you mean by goods, sir? What do you mean by services, sir? Now, because the supply, I will call a particular transaction as supply only if the supply is of goods or services. What do you mean by goods, sir? Goods means every kind of mobile property. What do you mean by goods? Goods means every kind of mobile property other than money and securities, but includes actionable claims, growing crops, things attached to or forming part of land which can be further supplied. And sir, what do you mean by services, sir? Services means anything other than goods, money and securities. Everything which is not goods, anything which is not money and securities will be treated as services. So services means what, sir? Anything other than goods, money and securities, but includes activity in relation to use of money or its conversion, for which a separate consideration is charged. Please note, there is something called as transaction in money only, and there is something called as active in relation to use of money, for which a separate consideration is charged. For example, I give you 1 lakh rupees and you give back me that 1 lakh rupees after 2 months. Is it a services? Answer is no, this is not a services. When will I call it as services? I give you 1 lakh rupees and after 2 months I take from you 1 lakh rupees plus 1000 rupees as consideration for giving this 1 lakh rupees to you. Now in that case, activity in relation to use of money, I have given money to you for your use. This will be treated as supply. This will be treated as services if there is a separate consideration charge. Now please note, since it is a marathon, I will make sure that we revise this, we complete the topic in a very limited period of time, meaning we I consume less of your time for revising the entire syllabus, so I will be little faster, not too fast but little fast. Okay, Okay, section 7 subsection 1 clause A says supply includes all form of supply of goods or services or both, such as sale, transfer, barter, exchange, lease, license, rental, disposal, made or agreed to be made by a person for a consideration in the course or furtherance of business. Sir, sir, what do you mean by consideration, sir? Consideration means what, sir? Consideration in relation to supply of goods or services or both includes any payment in money or otherwise by the recipient or any other person, but it shall not include the subsidy given by central government and state government. Similarly, consideration shall include monetary value of any act or forbearance by the recipient or any other person, but it shall not include the subsidy given by central government and state government. Further, refundable deposits also shall not form part of consideration. Refundable deposits will not form part of consideration until they are adjusted as consideration. So consideration definition says I am an inclusive definition. Inclusive definition means what, sir? Whatever you generally understand by the word consideration is a consideration. Apart from that, consideration will also include payment in money or otherwise by the recipient or any other person, but it shall not include the subsidy given by central government or state government. Further, monetary value of any act or forbearance by the recipient or any other person shall also be treated as consideration, but it shall not include subsidy given by central government or state government. So, if you are receiving any subsidy for a particular supply, and if that subsidy is received from central government or state government, it shall not be forming part of consideration. And refundable deposits also will not form part of consideration, because say for example, I am taking a house, taking a house on rent. When I take a house on rent, there will be monthly rents which I have to pay. Apart from that, I'll also have to give rental deposits or rental advance. This will be refundable. At the time when I vacate the house, this amount will be given back to me. So these refundable deposits will not form part of consideration. Then, sir, what do you mean by recipient, sir? What do you mean by recipient? Recipient in relation to supply of goods or services or both means, if consideration is there for that particular transaction of supply of goods or services, the person who is paying such consideration, the person who is liable to pay such consideration. So if for a particular transaction of supply of goods and services, if there is a consideration involved, if there is any money which you are paying, if there is a consideration involved, then the person who is paying such consideration will be treated as recipient. But if there is no consideration involved, so for example, there is a supply of goods or supply of services where there is no consideration involved. For example, this particular classroom which we are taking, correct? So I am giving you services. You are listening to my classroom. Are you paying me anything? Are you paying me anything? There is no consideration involved over here. In such cases, for goods, it will be the person to whom the goods are delivered, that person will be taken as the recipient, and for services, it will be the person to whom the services are rendered. Okay, so this is what is section 7 subsection 1 clause A telling. Section 7 subsection 1 clause A says if all these 5 elements are satisfied, I'll call a particular activity as supply. Section 7 subsection 1 clause B says importation of services. What is 7.1b telling? Importation of services shall also, for a consideration, will also be treated as supply if whether it is made in the course of business or not. If you are importing any services and if that services are imported for a consideration, now whether you are importing that services for your personal purpose or for your business purpose, I don't care, it will be treated as supply. So here what is important, sir? You are importing services and that services are imported for a consideration. What is important over here? Importation of services and that services are imported for a consideration. That services are imported for a consideration. It does not matter whether it is imported for business purpose or for personal purpose. Sir, what do you mean by importation of services, sir? Sir, what do you mean by importation of services? Importation of services means what, sir? Importation of services means the supplier of the services is outside India, the recipient of the services is in India, and the place of supply of that services is in India. So if for a particular transaction, if the supplier is outside India and if the recipient is in India and the place of supply also is in India, then that particular transaction will be treated as importation of services. And if you are importing any services for a consideration, whether it is imported for business purpose or not, it will always be treated as supply. It will always be treated as supply. Okay, not okay, sir. Okay, sir. Okay, sir. Now, what are the supplies without consideration? Section 7 subsection 1 clause C read with schedule 1. Section 7 subsection 1 clause C gives the list of different activities which will be treated as supply even if there is no consideration. Section 7 subsection 1 clause C says go to schedule number 1. Go where? Go to schedule number 1. In schedule number 1, I have listed few activities. These activities will be treated as supply. See, normally, if you want to call something as a supply, what is important? Consideration is important. What is important, sir? Consideration is important. But section 7 subsection 1 clause C says there are few activities which is listed in schedule number 1. These activities will be treated as supply even if there is no consideration involved. Wait. These activities shall be treated as supply even if there is no consideration involved. Sir, which are these activities? Sir, schedule number 1 gives the list of these activities. Activities specified in schedule 1 will be treated as supply even if it is without consideration. What are these activities? Permanent transfer or disposal of business asset provided input tax credit has been availed on such business asset. So if you are permanently transferring or permanently disposing of any business asset without consideration, if you are permanently transferring or permanently disposing of any business asset without consideration, and if you have taken input tax credit on such business asset, then that permanent transfer of that business asset will be treated as supply even though there is no consideration involved. Then supply of goods or services or both between distinct person or between related person or between distinct person referred to in section 25(4) or 25(5) if it is made in the course or furtherance of business. What is this next point telling? If you are supplying any goods or if you are supplying any services, to whom are you supplying goods or services? To your related person, or to your distinct person, to your related person or to your distinct person referred to in section 25(4) or 25(5). And if that supply is made in the course or furtherance of business, then it will be treated as supply. Then that particular transaction will be treated as supply even if there is no consideration involved. Say for example, I am having a shop. So I am having Priya Sarees. I am a sari dealer. I am having Priya Sarees. Now my wife is treated as my relative. Okay, so I am a sari dealer. I give a sari to my wife. Without consideration, my wife comes to Priya Sarees and I give sari to my wife. In this case, without any consideration, I am doing that. Okay, so I am making a supply of sari to my wife without consideration, and it is in the course of my business only. My business is supply of sari. This particular transaction we did as supply. Case number two, I don't give sari to my wife. I give a diamond ring to my wife. I give what, sir? I give a diamond ring to my wife. I am a dealer of sari. I give a diamond ring to my wife free of cost. Now, giving diamond ring to my wife free of cost, is it a supply, sir? Is it a supply, sir? Answer is no. Because, why, sir? Whatever goods or services I am giving free of cost to related person should be in the course or furtherance of my business. My business is not supplying diamond rings. Therefore, that will not be treated as supply. So, if I give free sari, I am a sari dealer. If I give free sari, it is a supply. If it is any other product, then obviously it is not a supply. So I'll repeat once again, supply of goods or services or both between related person or between distinct person referred to in section 25(4) or 25(5). Sir, what do you mean by this distinct person referred to in section 24 or 25(4) or 25(5), sir? 25(4) and 25(5) are your registration chapter section. So section 25 talks about what is the procedure for taking registration. Section 25(4) says, where a person has obtained or is required to obtain more than one registration, whether in a state or a union territory or more than one state or more than one union territory, he shall, in respect of each of such registration, be deemed as distinct person. So if a person has obtained more than one registrations, so under a same PAN, under a single PAN, if I have taken more than one registration under GST law, then each of those registrations will be deemed as distinct person. Sir, what do you mean by deemed as distinct person? Deemed as distinct person means they will be treated as different people. They will be treated as different people in the eyes of GST. Okay, when will it be treated as distinct person? Under, say, Mr. Dilip has one single PAN. So now under one single PAN, I have taken 5 registrations under GST law. Though the 5 different businesses belongs to me, or though these 5 different registrations belong to me, only one single person, Mr. Dilip, but still for the purpose of GST law, these 5 different registrations will be treated as distinct person. Now whether these registrations are in same state or it is in different state, it does not matter. Section 25(5) says, where a person has an establishment registered in a state and also has another establishment in another state or union territory, this establishment will be deemed as distinct person. What is 25(5) telling? 25(5) says, so 25(4) told that if you have separate registrations, this separate registration will be distinct person. 25(5) says, if you are having an establishment which is registered in a state and also have another establishment in another state or union territory, this establishment will be treated as distinct person. Now here what is happening? One of the establishment is registered and the other establishments may or may not be registered. Okay, so if there is any supply of goods or services between this distinct person also, so if you're doing any branch transfer, stock transfer from one branch to another branch, and if these two branches are registered separately, it will be deemed as it will treat as supply, even if there is no consideration charged by you. Now, when you see the definition of related person, the meaning of related person is given as a proviso to section 15. Section 15 talks about value of supply. When you see this value of supply topic, no, when you see this value of supply topic, section 15, there is an explanation given to section 15, which talks about this related person. Who is the related person? If you are officer or directors of one another's business, then if you are legally recognized as partners, if you are employer and employee, etc. So they have given this list. Or if you are a member of same family, etc., then you will be treated as related person. One of the person who is related is what, sir? Employer, employee. So if Dilip Priyasadis has 50 employees, these 50 employees, I am the employer, they are my employees. I am the employer, they are my employees. In this case, if I give anything to my employee free of cost, I am an employer. If I give anything to my employee free of cost, then that particular thing also will be treated as supply. It will be treated as supply. But however, there is a proviso which they have given. There is one benefit or one exclusion which they have given. They are telling, provided that gift not exceeding 50,000 rupees in value in a financial year by the employer to the employee shall not be treated as supply of goods or services or both. See, supply without consideration means what, sir? Something which you are giving for free. So if I give a gift to you, don't you think I'm giving that gift to you for free? Don't you think that gift which I have given is nothing but any goods or any services which is given to you for free? So what is this point telling? Employer and employer are treated as a related person. Now, if the employer is giving anything to the employee free of cost, if the employer is giving anything to the employee free of cost, then I will not call it as a supply up to 50,000 rupees. If the value of that particular thing which is given by me in a year, if the value of that particular one single thing or series of things, if the value is not exceeding 50,000 rupees per employee per annum, per financial year, then it shall not be treated as supply. For example, in a year, say during Diwali, I give some gifts to my employees. During Christmas, I give some gift. During Eid, I give some gift. During Pongal, I give some gift, etc. In these cases, so 4 different festivals, I gave gift of 10,000 rupees. The value is 40,000 rupees. Total gift given by me is how much, sir? 40,000 rupees. In this case, this transaction, will it be treated as supply? Answer is no. Then next point says supply of goods. Supply of what, sir? Supply of goods only. Supply of goods by principal to his agent or vice versa, wherein the agent is undertaking to further supply those goods on behalf of principal in his own name. I'll repeat once again. Supply of goods by principal to his agent. Okay, supply of goods by principal to his agent, wherein the agent is undertaking to further supply those goods on behalf of principal in his own name. So Dilip is supplying goods to Shahrukh. Okay, Dilip is owner of Priyasadis and Shahrukh is agent of Priyasadis. Okay, Dilip is therefore the principal and Shahrukh is the agent. Now Shahrukh is in Mumbai, Priyasadis is in Bangalore. So if Dilip is supplying goods free of cost to Shahrukh, who is the agent of Mr. Dilip, and where Shahrukh is supplying these goods to different customers, where Shahrukh is further supplying these goods, where Shahrukh is further supplying those goods in his own name. In whose name, sir? In the name of Shahrukh. Then this supply which is made by Dilip to Shahrukh will be treated as supply. This sarees which is given free of cost by Dilip to Shahrukh will be treated as supply. I'll repeat. Supply of goods by principal to his agent or vice versa. So if Shahrukh purchases some goods in his name and supplies it to me free of cost, then also this transaction will be applicable. So supply of goods by principal to his agent, wherein Shahrukh is undertaking to further supply those goods on behalf of Dilip in his own name, in Shahrukh's own name, and then whatever is supplied free of cost by Dilip to Shahrukh will be treated as supply. It will be treated as supply. Then lastly, importation of services by a person from his related person outside India or from his another establishment located outside India if it is made in the course or furtherance of business. So what is this point telling? If you are importing any services and if the services are imported by you for your business purpose. If you're importing any services, and that services are imported by you for your business purpose, and that services are imported by from your related person or from your another establishment located outside India, then the transaction will be treated as supply even if there is no consideration involved. See, normally section 7 subsection 1 clause B told if you are importing any services for a consideration, then it is always a supply, whether it is imported for business purpose or personal purpose, it does not matter. Now what is 7.1c telling? Para 4 or point number 4 of schedule 1 says if you are importing any services and then the service and those services are imported by you free of cost from your related person outside India or from your another establishment outside India, then it will be treated as supply if it is in the course or furtherance of business only. Okay, so these are the different activities which will be treated as supply even if there is no consideration involved. Next, section 7 subsection 1 clause AA, a new section was added. Under section 7 subsection 1 series. Section 7 subsection 1 clause A, clause B and clause C is what we have seen. A new section was added recently, section 7 subsection 1 clause AA, which talks about transactions or activities by a person other than individual to its own members for a consideration. For a consideration. So if there is any transaction by a person other than individual, so if there is any transaction happening between by one person who is not an individual to another person who is the member of that particular institution, and that transaction is for a consideration. Basically they are talking about AOPs and BOI etc., or they are talking about resident welfare association. So if you are staying in an apartment, you will be knowing that they collect something called as maintenance charges from you. If you're staying in an apartment, or normally in apartments, they collect something called as maintenance charges. Why are they collecting this maintenance charges, sir? They are collecting these maintenance charges for the welfare of all the members who are present in that apartment. Okay, so these members of apartment will contribute money to this resident welfare association or the association. The money which is given by them is maintenance charges. Why are they giving this maintenance charges? So that for the common area which is there, for example, the watchman's salaries can be taken care of. For example, the electricity in the common or the walking area can be taken care of. For example, the swimming pool maintenance can be taken care of, or there is some guards etc. who are appointed for paying these people. This association takes money from the members of the association. This transaction will be treated as supply. Basically, they are telling this transaction by a person other than individual to its own members for a consideration will be treated as supply. It will be treated as what, sir? Supply. So basically, section 7 subsection 1, if you see A, B and AA says for supply, if you want to call something as supply, what is important? Consideration. Section 7 subsection 1 clause C says if you there are few activities listed. See, normally if I want to call something as supply, what is important? Consideration. Section 7 subsection 1 clause C says there are few activities listed in schedule number 1. In case of these activities, I will call them as supply even if there is no consideration involved. Now, section 7.1 capital A read with schedule number 2. Now, what is section 7.1 capital A telling? Section 7.1 capital A says there are few items listed in schedule number 2. 7.1 capital A says what, sir? There are few activities or transactions listed in schedule number 2. Now, these activities listed in schedule number 2 are all supply only. They are all supply only. There is no doubt in that. But I am going to tell you who schedule number 2 is going to tell you whether that activity is treated as supply of goods or supply of services. See, basically, these were all the point of dispute under pre-GST law. For example, sale of SIM card, whether it is supply of services or supply of goods, because SIM card is product, correct? It is movable, so SIM card should be treated as goods. But are you buying SIM card because it is movable? You are buying a SIM card because you like the services of that particular company. Correct, not correct? Why are you buying the SIM card? To take the services of Jio, to take the services of Airtel, to take the services of Vodafone, etc. So there was a dispute before GST law. To make sure that this dispute does not continue under GST law, they have given this schedule number 2. So in schedule number 2, they have listed a few activities. These activities are all supply only, but schedule number 2 is going to clarify and tell you whether it is supply of goods or supply of services. The crux over here is in the entire schedule number 2. What is the crux? If you see the entire schedule number 2, this is the main crux. If you understand this point, then you understand schedule number 2. The crux is if the ownership is transferred, or if the title is transferred, then it will be treated as supply of goods. And if only right in the goods is transferred, then it is supply of services. So for schedule number 2, what is important for you to know, sir? You should know what is the meaning of goods and services. The definition of goods and services is required to be known. And then you should see whether ownership or title is transferred or it is not transferred, or only the right in the goods is transferred. Ownership and title of goods is transferred, only right in goods is transferred. For example, I am going and purchasing this mobile phone. So what will happen when I purchase this mobile phone? The ownership of this mobile phone will be transferred to me. Meaning, say OnePlus was the owner of this mobile phone. Now OnePlus, I am purchasing this phone from them. Now I am the owner of this phone. Correct? Because the ownership of this phone is transferred. So this transaction we treat as supply of goods. Now say for example, this phone belongs to someone else. I have taken this phone on rent from him for 2 days. In this case, am I the owner of this phone? I'm using this phone for 2 days. So the right of the phone, the right to use this phone for 2 days is transferred to me. In this case, this transaction will be treated as supply of services. So that is the only point over here. That is the main crux over here. Okay. So if the ownership is transferred, supply of goods. If only right is transferred, then it is supply of services. Then section 7 subsection 1, section 7 subsection 2 read with schedule number 3. No supply or negative list of supply. Fantastic point. Section 7 subsection 2, negative list of supply or no supply. What is section 7 subsection 2 talking all about? Section 7 subsection 2 says, I will tell you what are the activities which will not be treated as supply at all. I will tell you what are the activities which are not a supply at all. So there are some activities notified by government. Government has told that these activities will never be treated as supply. Further, there are some activities which is listed in schedule number 3. There are some activities listed in schedule number 3, and these activities which are listed in schedule number 3 also will not be treated as supply. Okay, so what are these different activities covered over here? The activities performed by panchayat or municipality under article 243G or 243W. Point number 1, activities performed by whom, sir? Panchayat or municipality under article 243G or 243W. So the article 243G and 243W gives a list of different work which can be undertaken by panchayat and municipality. So if panchayat and municipality is undertaking those work, then though they are giving you services, though they are making a supply to you, that transaction will not be treated as supply. Therefore, there will be no GST applicable. Grant of liquor license by state government. So if you want to start a liquor business in a particular state, you will have to take a license from the state government. So state government is giving the license to start a liquor business to you. So state government will take some money from you. So though the state government is granting you a license, though they are supplying goods to you, services to you, this transaction will not be treated as supply. Then schedule 3 activities. Schedule 3 gives a list of totally 9 activities which will not be treated as supply at all. Schedule number 3 gives list of how many activities, sir? 9 activities which will not be treated as supply at all. Services given by employee to the employer in the course of employment. So any services given by employee to the employer in the course of employment. Now if you basically see over here, all the conditions of 7(1)(a) are getting satisfied. All the conditions, there are totally 5 conditions. If I want to call it something as a supply, 5 elements should be satisfied. All the 5 elements of schedule number 1 are getting satisfied over here. Though all the 5 elements are getting satisfied, this transaction will not be treated as supply. Sir, which are these 5 elements, sir? The services are given by employee to the employer. Services are given by employee to the employer in the course of employment. So 5 elements says what, sir? There should be supply of goods or services. Is there a supply of services? Yes. Now when the services are given, that services are given by my employee, so therefore it is by a person. Then the services are given by him, it is made or agreed to be made. That services is for a consideration, I am going to pay them some money, and that services is in the course or furtherance of my business only. Though all the 5 elements are getting satisfied, this transaction, government only, the lawmakers have specifically told it is not a supply. So schedule number 3 gives the list of these different activities which will not be treated as supply. Okay, services given by employee to the employer in the course of employment. Services given by whom, sir? MLA, MP, President, Prime Minister, Judge of Supreme Court, High Court, etc. Services given by court or tribunal except arbitral tribunal. Services given by funeral, burial, cremation, mortuary, including transportation of deceased. Sale of land, comma, and sale of building subject to para 5B of schedule number 2. Para 5B of schedule 2. What is this point? We'll see. Then actionable claims except specified actionable claims. So if there is any transaction in actionable claims, it is not treated as supply. But if the transaction is in specified actionable claims, then it will be treated as supply. So what are the specified actionable claims? So if the transaction is in law with respect to lottery, betting, gambling, horse race, online money gaming, and casino. So if you do betting activity, if you purchase any lottery ticket, if you're doing any gambling activity, if you go to casino and you spend some money over there, or you spend money in online money gaming, etc. So lottery, betting, gambling, horse race, online money gaming, and casinos, these transactions, they are all treated as actionable claims only. Okay, they are all treated as actionable claims. If there is a transaction in these actionable claims, these are specified actionable claims. If there is a transaction in these actionable claims, then it will be treated as supply. Then third country sales, also known as out and out sales, or warehouse sales, also known as in-bond sales, and high sea sales. So if there are these transactions, it will not be treated as supply. Schedule number 3, services by employee to the employer in the course of employment. Services by MLA, MP, President, Prime Minister. Services by any court or tribunal except arbitral tribunal. Services by way of funeral, burial, cremation, mortuary, including transportation of deceased. Sale of land, comma, and sale of building subject to para 5B of schedule 2. So if there is a sale of land happening, no, it is not a supply at all. If there is a sale of land, then it is not a supply at all. But sale of building will be treated as supply provided conditions of schedule number para 5B of schedule 2 is satisfied. What is sale of building? Sale of building. Now see, what is sale of building? Point telling. In case of sale of building, if the consideration is received before completion certificate or before first occupancy. For sale of the building, for sale of what, sir? For the sale of building, if the consideration for the sale of building is received before completion certificate or before first occupancy, then the transaction of sale of building will be treated as supply. And the consideration is received after completion certificate or after first occupancy, then it will not be treated as supply. So if the consideration, meaning for that sale of that building, so if you are going and purchasing the flat, and now you are purchasing the flat, for purchase of the flat, if you are giving the money before receipt of completion certificate of that flat, say that whatever apartment you are purchasing, whatever flat you are purchasing, completion certificate is required to be obtained by the builder. So if you are paying the money to him before obtaining completion certificate, then your transaction will be treated as supply, and therefore you will have to pay GST along with whatever amount you are paying. But if you are paying the money to him after obtaining completion certificate, then that transaction will not be treated as supply, and therefore no GST will be applicable. So this is all about your first topic, which is supply topic. Very important and very beautiful topic, one of the most important topic under GST law, because this is the reason because of which you are paying the taxes. Now entire discussion is in one single page. Supply. Section 7 of CGST Act talks about this beautiful point called as supply under GST law. I hope this point is very clear to you all. Let us now go to the next point. There are some circular with respect to this supply. There are some circular with respect to this supply. We'll also see these circulars. There are some important circulars which are issued by government, by the board, CBIC, Central Board of Indirect Taxes and Customs. Let us see what are these circulars talking all about. Now, I'll just tell you the gist of this circular. Point number 1 says, artwork sent by artist to art gallery for exhibition is not a supply. So if I'm an artist, I'm a painter, etc., I'm an artist, etc., I have done very beautiful paintings. Now I sent this painting to the gallery for exhibition purpose. Is it a supply? Answer is no, because I'm just sending it over there. I'm not receiving any money. But if at that exhibition someone purchases those paintings, then it will be treated as supply. So artwork which is sent by artist to the gallery for exhibition is not a supply, as there is no consideration which is received by the artist. However, if a buyer selects any particular artwork displayed at the gallery, then actual supply will take place. Now, there is a concept called as tenancy right. Now this tenancy right, if you're transferring the tenancy right, if the tenancy right is transferred against a consideration, then it will be treated as supply of services, and accordingly it will be liable to GST. So transfer of tenancy right will be treated as supply of services and it will be liable to GST. Then in case of joint venture, taxable services provided by members of joint venture to the joint venture or vice versa, or between the members themselves will be treated as supply. Now what happens over here? Supply of services by members to joint venture, supply between joint venture and members, and payout out of cash calls for supply. Now say for example, there is a joint venture which is formed by three people, A, B and C. Now they all have contributed 1 lakh rupees. Okay, by contributing 1 lakh rupees, the total 3 lakh rupees was invested to purchase a machinery. Now this machinery is used for providing different goods and services. So this money which is contributed by them, are called as cash calls. Now whatever services they are receiving from this joint venture, who ABC are receiving from this joint venture, this particular transaction will not be treated as supply, because the contribution made by them was for purchase of this machinery. Case number 2, there are three people, A, B and C. C already has a machinery. Now these people come together and they contribute 1 lakh rupees. Okay, now please note, case number 1, ABC contributed to 1 lakh rupees and then purchased a machinery, and using this machinery services were given or any goods were supplied, etc., whatever the case is. Now that transaction is not treated as supply because the money which is contributed by me was for purchase of some item. Case number 2, ABC entered into a joint venture agreement wherein C already has a machinery, and ABC they come together. They all contribute 1 lakh rupees. Now after contributing 1 lakh rupees, using the machinery of C, services are given to all the members of joint venture. Now this transaction will be treated as supply. Though it looks like it is a capital contribution, it is not a capital contribution. It is actually a consideration for the services which ABC are taking by using the machinery of Mr. C. Okay, so this clarification was given by the board. Then there is something called as priority sector lending certificate. These priority sector lending certificates are treated as goods. These priority sector lending certificates are treated as goods and therefore liable for GST. Now then, if there is interstate movement of various modes of conveyance between distinct person, which is used for carrying any goods or passenger, it will not be treated as supply, and which is sent for repairs and maintenance will be regarded as supply. Sir, what do you mean by this particular thing, sir? Say for example, there is something called as SRS travels or VRL travels. Now what is happening, sir? SRS travels is there in Bangalore also, SRS travels is there in Chennai also. Now SRS travels is sending its bus which is carrying passenger or which is carrying goods from Bangalore to Chennai. Now SRS travels has a bus. This bus SRS travels, this bus which is there, this bus is moving from Bangalore to Chennai. This bus is moving from Bangalore to Chennai. Now which is carrying passengers and goods. This bus is carrying passengers and goods moving from one state to another state. Now whether this transaction of, see, the services given for of transportation of passenger and transportation of goods is a supply and therefore it is taxable under GST. Now the question is whether this bus which is moving from one state to another state, whether this movement of bus which is there, this bus which is going from one distinct person to another distinct person, whether this is treated as supply of bus. Answer is no, it is not treated as supply of bus because it is the mode of conveyance which is just carrying passengers and goods. It is actually not supply of this bus from one distinct person to another distinct person. But whereas from Bangalore, this bus is going to Chennai for the purpose of repairs and maintenance. Now in Chennai, repairs and maintenance of this bus is happening. So this unit in Chennai is giving services. What services? Repair and maintenance services to the unit in Bangalore. This transaction will be treated as supply. So for what purpose it is going, that is very important. If it is going, if it is only carrying passengers and goods, then it is not regarded as supply. But if it is going for the purpose of repairs and maintenance, then the transaction will be treated as supply. Now, servicing of cars involving supply of both goods and services, the value of the goods and services shown separate. Now, this point was with respect to the service industry which is there. Like, for example, I have my bike, I have my car, etc. Whenever I give this bike and car for service, no, there they put oil in that bike, that car, etc. They put some nut and bolt if some nut and bolt is loose. They sometimes they also change the brake shoe, etc. So there are various different parts which are supplied along with the services which they are giving. What services? That vehicle repair services which they are giving. So in this case, sir, in this case, whether it is treated as composite supply or mixed supply, should I apply highest rate or should I apply the rate of composite supply? What is the concept all about, sir? Lawmaker says, see, whenever you give any vehicle on services, if along with the services which they are providing, if they are also supplying any goods, if they are also supplying any goods along with the services which they are providing, then if the invoice specifically mentions differently, separately, if they specifically this distinguish between the value of the services which is given and the value of the goods which is supplied, then this transaction, then you please apply separate rate for goods and separate rates for services. But if there is a single invoice giving that, say, repair services some 5,000 rupees, wherein there is no bifurcation between what is the value of the services and what is the value of goods, then it will be treated as mixed supply and highest rate will be applicable. So this is one clarification which they are given. So CBIC has clarified that the goods and services would be liable to tax rates applicable for such goods and services separately if the value of the goods and services are shown separately on the invoice. Then taxability of printing contracts. Lot of printing contracts happen. For example, our t-shirt, if you can see, this is also printed. Correct, not correct? This t-shirt, if you see, so there is this logo which they have there is this logo which they have printed over here. There is this logo which you have printed over here. So in this case, what happens, sir? This is a type of printing contract. So whenever you go to restaurants, you would have seen tissue paper having the name of that particular restaurant, etc. So now these are, or whenever you go to any offices, you would have seen envelopes having the logo of that particular company. So now what, and there are people who also ask, say for example, I have my material, this material which you are seeing over here, this is also available in hard copy. So this material which is there, this material which is there, this material which is there, it is printed by someone. So now the question is whether this transaction of printing is it a supply of goods or supply of services. Very beautiful point. Now they say, in case of my material, my content is given by me. Correct, not correct? The content is given by me, meaning this entire particular the content for the material is given by me, and the person is going to print that content on the paper and make it in the book form and give it back to me. Now in this case, this transaction will be treated as supply of services, because here the material which is there, no, the content is more important when compared to the paper. The content is more important. The content is more important. So that person who is printing is just giving a services of putting that content on the paper and give it back to you. But in case of envelopes, in case of tissue papers, logo which is put is just the logo which is put. It is just one small logo which they have put. But the more important item is that envelope. The more important item is the tissue paper. So in that case, if on the tissue paper logo has been put, on the envelopes logo has been pushed, etc., then that will be treated as supply of goods, because what is important over here, that goods, the tissue paper or envelopes are important. Content are owned by the publisher or the author, and paper and printing is given, printing services are paper is given by the printing press, or the printing is done by the principal printing press, then it will be treated as supply of services. Now, supply of printed envelopes, letter, cards, tissue papers, etc., using the design supplied by the recipient, it will be treated as supply. I've just given the design. For example, in this case, see this transaction, they have just printed the logo. This design was given by us. ArP Pro design was given by us. Now, in this case, whether this transaction will be treated as supply of goods or services, supply of services, it will be treated as supply of goods. Then, one very important question. I mean, this was asked in the examination also once. And recently it was asked for intermediate students. Donation received by charitable institute from individual donors without quid pro quo, without something in return or without consideration. Now what is this point telling? Now for example, there is a charitable organization. I give some donation to the charitable organization. Now normally what happens, sir, whenever I give donation to the charitable organization, they'll write with best regards from Mr. Dilip Raj Purohit, etc. So there are some stories they'll write, thank you Mr. Dilip Raj Purohit for your contribution, for the lunch contribution which is done by you today, etc. So in this case, so whatever donation is given by me, now is it for the service? So because they are writing my name, because that institution where to whom I am giving the donation, because they are writing my name, is it treated as advertisement services given by that company, that institution to me? Is it treated as advertisement services given by that institution to me? Lawmaker says, if the contribution made by you, if I have given donation, donation means what, sir? I have given money and not expecting something in return from you. But I gave the money to you, I gave the donation to you, and in return you are displaying in my name in such a way that it is giving publicity to my business. Say for example, I gave donation of 1 lakh rupees to a charitable organization, to a old age home. Now they are writing, thank you Mr. Dilip of Priya Sadis for making this generous contribution. Now, whenever a person is walking by, if he sees, oh, Dilip of Priya Sarees is making contribution over here. Oh, it is very good. I should go to Priya Sarees to purchase more and more sarees. Now, it is giving publicity to my business. In this case, no, though I have given donation, lawmakers are telling this is not a donation. This is indirect advertisement services given by that charitable organization to you. Therefore, it is a supply. But if that charitable organization writes, thank you, Mr. Dilip, for your generous contribution. Now, which Dilip? Who is this Dilip? Where is this Dilip from? No one knows, correct? So it is not giving publicity to my business, etc. So in this case, whatever donation is made by me is not for anything in return. It is not for any consideration from that other person. Therefore, the transaction will not be treated as supply. So donation received by charitable organizations are treated as consideration only if there exists quid pro quo, that there is an obligation on the part of the recipient of the donation or gift to do anything, that is supply services. If the donor's name is displayed, does not give publicity to the business of the donor, then it is not treated as supply, and in other cases it will be treated as supply. Then one more clarification was given with respect to perquisites given by employer to the employee. Any perquisites given by the employer to the employee will not be treated as supply if it is as per the contractual agreement between the employer and employee. Then one beautiful clarification was given with respect to activities which are treated as supply of services, agreeing to an obligation to refrain from an act, to tolerate an act or a situation, or to do an act will be treated as supply of services. There was a clarification given with which are the activities which will be treated as supply of services and what will not be treated as supply of services. For example, I'll just give one example. You can, list of different examples are given over here. You can go through this. Say for example, right next to my house there is a school. Okay. So every morning when I'm sleeping on my bed, this school, no, I get up at around say 8 a.m. Okay, I get up at around 8 a.m. So every morning when before I wake up only at 7 a.m. the school starts, and at 7 o'clock only when I'm in deep sleep, this person over here, suddenly they start Jana Gana. So suddenly I have to respect. National anthem is going on, and I have to respect, and I stand up on my bed only. I'm standing up on my bed only because why, sir? I'm getting disturbed. They have their mic, the school people, they have installed the mic in such a way that the sound comes directly to my room. So I'm getting, and this is a residential area. This place where the school is there is a residential area. So I'm getting disturbed. I'm getting disturbed from this particular school. So what I do? I go raise a complaint. I go to the school principal, I go to the headmaster, or I go to the trustee, the chairman of the school. I tell, sir, you please stop this morning prayer, sir, because this I'll get lot of disturbance and I'm not able to sleep. So school people say, so what? Arey, so what? What are you telling? So what? Please make sure that the voice is low, or please stop this voice, or please turn your the speaker to some other place, etc. So school people says, no, I'll not do. I said, okay, don't do. I'll go give a police complaint that you are having a schooling residential area. Now, school people says, wait, Mr. Dilip, wait. You do one thing, Mr. Dilip, because you are getting disturbed. Okay, you please tolerate this disturbance. For tolerating this disturbance, I will pay you 50,000 rupees per month. If you tolerate this, every month I'll pay you 50,000 rupees. What is the school telling? If you tolerate this, I'll pay you 50,000 rupees every month. Now, I said, okay, I have agreed to tolerate an act, and for which I am getting a consideration. For agreeing to tolerate an act is treated as supply of services if there is a consideration involved. So this act will be treated as supply of services. Case number two. Okay, case number two. Case number two. Now, the problem is I don't want to give my example sometimes. Now, say for example, there is a car. Okay, there is a car. So today morning when I was on my bike when I was on my way to the institute. There was a car and there was one lady on her two-wheeler. On her two-wheeler, there was this lady on her two-wheeler. Suddenly, when there was a red signal, okay, the signal was red. Everyone has to stop. This car stopped. This lady, Gobi is there. No, this lady hit the car. This lady hit the car. Suddenly, she wanted to stop, but she did not see the signal, or she thought it'll just cross, etc. So she hit the car. When she hit the car, I was standing somewhere over here, nicely enjoying. Wow, what a beautiful hit it is, etc. So now this car fellow, whoever was there inside the car, he came out and he told, you have damaged my car, you please pay money for this. Therefore, this lady paid 5,000 rupees. Therefore, this lady paid 5,000 rupees. Now, is this transaction treated as supply, sir? Is this transaction treated as supply? Now, what is happening over here? Now, what is happening over here? There is one act done by this lady. Okay, there is one act which is done by this lady. Now, this person is tolerating that particular act. For tolerating that act, he has taken 5,000 rupees. In this case, is it treated as supply? See, first case also similar activity was happening, and first case I said it is a supply of services, therefore taxable. In this case, in case number 2, is it supply of service, sir? Lawmaker says no, it is not supply of services. Why, sir? Why, sir? Lawmaker says, see, if you want to call a particular transaction as supply of services under this provision, which provision? Under this particular head, which is agreeing to an obligation to refrain from an act, etc., etc., etc. If you want to call something as a supply, then these important conditions should be fulfilled. What conditions, sir? There should be an expressed or implied agreement. Now, we had an expressed or implied agreement. The school told, I am going to pay you money for tolerating. Here, there was no agreement between these two people. Meaning, there was no agreement between the person who is driving the car and the lady telling that if you hit my car, you will have to pay the money to me. Now, because there is no such agreement, there is no such contract or agreement, this transaction, though there is a money which is received by you, this transaction will not be treated as supply. Okay, so like this, they have given some more examples to you. You can just go through. So this is all with respect to topic number 1, which is supply. Now, the next point for our discussion is section number 8. Section number 8 talks about what, sir? Section number 8 talks about taxability of composite and mixed supply. Section number 8 talks about what, sir? Taxability of composite supply and mixed supply. There is something called as composite supply and mixed. There is something called as mixed supply. Section 8A talks about taxability of composite supply, and section 8B talks about taxability of mixed supply. Section 8A says composite supply are taxed at the rate of principal supply, and section 8B says mixed supply are taxed at highest rate. Sir, what do you mean by composite supply, sir? Composite supply means supply of 2 or more taxable goods and services which are naturally bundled in ordinary course of business, supplied in conjunction with another, one of which is principal supply. So if 2 or more taxable goods and services are supplied together and one among them is a principal supply, then it will be treated as composite supply. And if it is a composite supply, that supply is taxable at the rate of what, sir? Principal supply. Then mixed supply. Mixed supply means what, sir? Mixed supply means supply of 2 or more individual goods and services which are not naturally bundled in ordinary course of business. If there are 2 or more individual goods and services which are not naturally bundled in ordinary course of business, and they are supplied for a single price, and it is not a composite supply, then I will call it as mixed supply. So if 2 or more separate things are supplied to you together for a single price, and it is not a composite supply, then the transaction will be treated as mixed supply. And if it is a mixed supply, it will be taxable at highest rate. For example, I am buying a mobile phone, I am getting charger free. Now, charger is taxable at separate rate under GST law if you buy charger separately, and mobile phone is taxable at separate rates. Now, these 2 things are supplied to you together. Now, in this case, whether it is a composite supply or mixed supply, lawmaker says it is a composite supply because normally when you purchase a mobile phone, charger is required to be given along with that. Compulsorily, it should be given. It is a composite supply, wherein mobile is the principal supply. The main supply is mobile, and charger is ancillary to the principal supply. In the present case, for this entire supply, you will have to pay the tax at the rate of principal supply. Next, say for example, I have purchased a washing machine. I am getting a bucket free. There is no correlation at all. Lawmaker says there is no correlation at all. For washing machine, you are getting a bucket. No, there is no correlation. In this case, it is a mixed supply. Now here, highest rate. Now bucket, assuming bucket is taxable at 5% GST and washing machine is taxable at 28% GST, for entire thing I will have to pay a tax at 28%, which is the highest rate. Now next, before going to the next section, which is section number 9, which talks about charge under GST law, charge under GST. Before discussing that, let us quickly see some important points with respect some important points which we'll have to know. What do you mean by intrastate supply? Intrastate supply detailed definition we'll learn in place of supply topic. In general, intrastate supply, I will call a particular transaction as an intrastate supply if the location of the supplier and the place of supply is in same state or same union territory. And I will call a particular activity as an interstate supply if the location of supplier and place of supply is two different states, two different union territory, one state, one union territory, or it is a case of export of goods or services, import of goods or services, or supply made to an SEZ unit or SEZ developer. So what do we and whenever it is an intrastate supply, you will have to pay CGST, SGST, or CGST, UTGST, and if it is an interstate supply, you will have to pay IGST. Then, sir, what is India, sir? India means the land regions of India, and it includes up to 200 nautical miles, that is exclusive economic zone, territorial waters, continental shelves, and exclusive economic zone. Now, we have totally, if you see, we have 28 states plus 3 union territories are also regarded as state for the purpose of GST law. Which are these 3 union territories which are regarded as state for the purpose of GST law? Delhi, Puducherry, and Jammu and Kashmir. Totally, we have actually 8 union territories. Okay, in the normal sense, we have totally 8 union territories, but there are 3 union territories which are treated as state for the purpose of GST law, which is Delhi, Puducherry, and Jammu and Kashmir. So normally, if there is a intrastate supply happening in the union territory, then the tax which you have to pay is CGST and UTGST. But if the supply is within the union territory of Jammu, Kashmir, Pondicherry, and Delhi, then you will pay CGST and SGST, because these 3 union territories are treated as state for the purpose of GST law. Now, what do you mean by forward charge, sir? Now, the tax payment under the GST law is in 2 ways, either under forward charge or under reverse charge. Forward charge means the supplier of goods and services makes the payment of taxes to the government, and reverse charge means the recipient of goods and services makes the payment of taxes to the government. Now, taxable person means what, sir? Taxable person means a person who is registered or liable for registration under section 22 or under section 24. And what do you mean by an e-commerce operator? E-commerce operator means a person who is owning, operating, maintaining, managing an electronic platform for electronic commerce. Now with this, let us start our discussion on section 9. Section 9 is the charging section of GST law. Section 9 is what, sir? Charging section of CGST Act. Section 9 of CGST Act is the charging section of CGST Act. Section 9, similar section 9 is there under SGST Act also. Similarly, section 7 is there under UTGST Act, and section 5 is there under IGST Act. Same to same provisions are there under respective different acts. Section 9 subsection 1 says, subject to the provision of subsection 2, there shall be levied a tax called as central goods and services tax on all intrastate supply of goods or services or both, except on alcoholic liquor for human consumption on value determined under section 15 at such rates as may be notified by the government not exceeding 20%. It shall be collected in such manner as may be prescribed and paid by taxable person. Now, what is 9.1 telling, sir? 9.1 says you will have to pay a tax. What is that? You will be liable to pay a tax called as central goods and services tax. When will I be liable to pay this tax called as central goods and services tax? When you are making intrastate supply of goods or services or both. When you are making what? Intrastate supply of goods or services or both, except alcoholic liquor for human consumption. And on what amount will I have to pay, sir? So whenever you are making any type of intrastate supply of goods or services, you'll have to pay a tax called as CGST. And if this, except on alcoholic liquor for human consumption, if it is alcoholic liquor for human consumption, this point is not applicable to you, and you will have to pay this tax at on what value, sir? On a value determined under section 15, on the value which is mentioned under section 15. And at what rate will I have to pay, sir? At that rate as may be notified by the government, but not exceeding 20%. So maximum CGST which government can collect from you is 20%. Then how will it be collected by the government, sir? In the manner as may be prescribed. So government will tell you how the government is going to collect this money from you, and it shall be paid by the taxable person. Who shall pay it? Taxable person shall pay these taxes. Who is a taxable person? A person who is registered or liable for registration. So in simple words, 9.1 is telling, whenever you are making an intrastate supply of goods or services, you will have to pay a tax called as CGST. But however, if you are making intrastate supply of alcoholic liquor for human consumption, you don't have to pay any GST. Okay, you don't have to pay any GST. Now, sir, I understood that whenever I make an intrastate supply of goods and services, I have to pay GST except on alcoholic liquor for human consumption. Sir, on what value will I have to pay? On the value determined in the section 15. Go ask section 15, value of supply topic. Go ask section 15, what is the value on which you have to pay the taxes. Okay, sir, value also I understood. Sir, at what rate will I have to pay the taxes? If you want to know the rate, then that rate will be notified by the government. Government is going to tell you for different products, different goods and services, what is the rate of GST. At that rate, you will have to pay, not exceeding 20%. Maximum, how much is the rate which government can levy, sir? Maximum 20% government will be levying the rate. And this money government will come you, this tax government will collect from you in the manner as may prescribed by them. And who has to pay this tax? This entire point is applicable to whom? It is applicable to a taxable person. Section 9 subsection 2 says CGST on intrastate supply of HP man. CGST on intrastate supply of HP man shall be levied from the date notified by the government on the recommendation of council. What do you mean by HP man, sir? High speed diesel, petroleum crude, motor spirit, aviation turbine fuel and natural gas. CGST on intrastate supply of HP man shall be levied from the date notified by the government on the recommendation of council. So, on HP man, as on today, there is no GST levied, but GST will be levied from a future date as may be notified by government. So, what do you mean by HP man? High speed diesel, petroleum crude, motor spirit, aviation turbine fuel, and natural gas. On these 5 products, as on today, there is no GST levied. On GST will be levied on a future date as may be notified by the government. Section 9 subsection 3 and 9 subsection 4. This both talks about reverse charge. This both talks about section 9.3 and 9.4 talks about what, sir? Transactions on which the recipient will have to pay the taxes. Reverse charge mechanism. Section 9 subsection 3 says CGST on intrastate supply of notified goods and services shall be paid by the recipient of such goods and services under reverse charge. What is 9.3 telling? CGST on intrastate supply of notified goods and services shall be paid by the recipient of such goods and services under reverse charge. So, if for notified goods and services, the government is going to give list of some goods and services. The tax on these goods and services is required to be paid by the recipient of such goods and services under reverse charge. Section 9 subsection 4 says CGST on intrastate supply of notified or specified goods and services received from an unregistered person by a notified or specified registered person will be paid by that specified registered person under reverse charge. What is this point telling? 9.4 says I am going to give you a list of some goods and services. If these goods and services are purchased by you from an unregistered person, by whom, sir? If these goods and services are purchased by a notified registered person from an unregistered person, then this notified registered person will have to pay the taxes under reverse charge. So, what is the basic difference, sir? Under 9.3, they are going to give you the list of goods and services. On these goods and services, the recipient will have to pay the taxes under reverse charge. 9.4 says I am going to give you the list of person as well as the list of goods and services. I will give you the list of goods and services on which RCM is applicable. On these items, you will have to pay a tax under reverse charge. Who will have to pay? The notified registered person. I am also going to give you the list of people who are required to pay the tax under reverse charge. Now, these people will have to pay the taxes on these goods and services under reverse charge only if they purchase it from an unregistered person. So, if it is purchased from a registered person, 9.4 is not applicable. So, what is important from exam point of view is mostly section 9 subsection 3. Then, section 9 subsection 5 also an important section. Section 9 subsection 5 says what, sir? If notified services are supplied through e-commerce operator, the tax on that supply is required to be paid by e-commerce operator. So the government says, I am going to give you a list of some services. If these services are supplied through an e-commerce operator, the tax on that supply is required to be paid by e-commerce operator. Provided that if the e-commerce operator does not have physical presence in taxable territory, that is India, then any person representing such e-commerce operator in taxable territory, that is India, will have to pay the taxes. Provided further that if the e-commerce operator does not have physical presence in taxable territory and he does not have any representative, then he will have to appoint a person in India to pay the taxes. Now, what is this point telling? This point says 9.5 says some services will be notified by the government. On these services, e-commerce operator will have to pay the taxes if these services are supplied through an e-commerce operator. Only if the services are supplied through an e-commerce operator. Now, the question is, sir, what if e-commerce operator does not have physical presence or he does not have any office in India? Then any person who is representing the e-commerce operator in India will have to pay the taxes. Sir, what if there is no representative also? In such cases, e-commerce operator will have to compulsorily appoint a person in India to make the payment of this taxes. Now, what are the different services covered over here, sir? Transportation of passenger services, accommodation in hotel and guest house services, then housekeeping services and restaurant services. So, if these services are, for example, transportation of passenger, Ola, Uber, then accommodation, housekeeping, accommodation, it is OYO, housekeeping it is Urban Company or Urban Clap, and restaurant it is Swiggy, Zomato, etc. In these cases, who has to pay the taxes? E-commerce operator will have to pay the taxes if these services are supplied through e-commerce operator. Now, however, there is one more clarification is they have given. In case of accommodation in hotel, in guest house, housekeeping and restaurant services, if these three people are registered in the GST law, if the service person who is providing the services are registered in the GST law, then these people will have to pay the taxes and not the e-commerce operator. Now, what is important in entire 9, section 9 series is section 9 subsection 3 and section 9 subsection 5. Section 9.5 something which we just now saw. Section 9 subsection 3 is another important point. What is this another important point section 9 subsection 3 talking all about? Section 9 subsection 3 gives the list of different services which are gives the list of different goods and services which are taxable under reverse charge. These goods and services are listed out via notification. Now the services on which tax is required to be paid under reverse charge is very important. What are those services on which the tax is required to be paid by the recipient under reverse charge? We will see now. These services are notified by notification number 13/2017. So this is the notification which gives the list of different services on which tax is required to be paid under reverse charge. Now there are some important items which I'll mark, others I'll just discuss. GTA giving services to 7 notified persons or 7 specified persons. If a goods transport agency gives services to 7 notified persons, who are these 7 notified persons? Factory society, cooperative society, then partnership firm including LLP, registered person, body corporate, and a casual taxable person. If a goods transport agency gives services to these 7 notified persons, then these 7 notified persons will have to pay the taxes under reverse charge. Important. Then, if legal services are given by an advocate to a business entity, then that business entity will have to pay the taxes under reverse charge. Another important point. If legal services are given by whom, sir? An advocate. To whom, sir? A business entity. That business entity will have to pay the tax under reverse charge. Then, arbitral tribunal services given to a business entity. If arbitral tribunal is giving services to a business entity, then the business entity will have to pay the taxes under reverse charge. Not so important. If sponsorship services are given by any person to a body corporate or a partnership firm, then that body corporate or a partnership firm will have to pay the taxes under reverse charge. Then any services given by government to a business entity. What services? Any type of services given by a government to a business entity, that then that business entity will have to pay the taxes under reverse charge. Except 5 services. Except which services, sir? Except the services of with respect to Department of Post, services given by Indian Railway, services with respect in relation to aircraft and vessels inside and outside the pursuance of ports and airports, except transportation of passenger and transportation of goods. Then renting of immobile property services given by any person. So renting of immobile property services given by government to a registered person, then that registered person will have to pay the tax under reverse charge. These are important items. Then newly added item, renting of residential dwelling to a registered person, then that registered person will have to pay the tax under reverse charge. Then not important. Transfer of development right, floor service interest, or giving any property on long-term lease by any person to a promoter, then that promoter will have to pay the tax under reverse charge. Then another important item, services given by director of a company to the said company, then that said company or body corporate will have to pay the taxes under reverse charge. Please note, this shall include the services which are given for which the TDS is deducted under section 194J of income tax law, and it shall also include include only the services on which TDS has been deducted under section 194J of income tax law, and the services which are given in his personal capacity. There are 2 type items which is included, meaning, see, directors can be of 2 types. Basically, director can be an employee director or you can be a non-employee director. So if you are a non-employee director giving services to the company, then always RCM is applicable. Always RCM is applicable. Whether that services are given in your professional capacity or personal capacity, it does not matter. But if you are a non-employee, if you are an employee director, you are giving services as an employee, not a supply covered under schedule number 3. It is not a supply at all. But if you are giving services for if you are giving services for which TDS is deducted under section 192 of income tax law, that means the amount which is paid by the company is a salary, therefore not a supply. But if you are giving services to the company, you are an employee director, and if you are giving services to the company for which TDS is deducted under section 194J by the company, then RCM will be applicable. And if you are giving services to the company, you are an employee, but you are giving services to the company in your personal capacity, then also RCM will apply. Okay, then also RCM will apply. Next, not important, insurance agent is giving services to insurance company has to pay the tax and reverse charge. Recovery agent is giving services to the banking company or financial institution. Banking company or financial institution has to pay the tax and the reverse charge. Original MAD services, meaning original musical, artistic and dramatic services given to a music company or a producer. The music company or a producer has to pay the tax and the reverse charge. Overseeing committee of RBI is giving services to RBI. Overseeing committee has to pay the tax and the reverse charge. Individual direct selling agent is giving services to banking company or NBFCs. Then that NBFC or banking company has to pay the tax and the reverse charge. Then business facilitator or agent of business facilitator or business correspondent is giving services to the bank, etc. They have to pay the taxes and reverse charge. Next, important. Renting a security services given by any person other than a body corporate to a registered person. If which services? Security services, supply of manpower services is given by any person other than body corporate to a registered person, then that registered person will have to pay taxes and reverse charge. Renting of motor vehicle services given by any person other than a body corporate to a body corporate, then that body corporate will have to pay the taxes and reverse charge. Then lending of securities services given by lender to the borrower has to pay the taxes. Then another important point, importation of services given by any person to a person located in India except non-taxable online recipient, then that person located in India will have to pay the taxes under reverse charge. So if any person is importing services, then he will have to pay taxes under reverse charge, except where he is not a non-taxable, where he is a non-taxable online recipient. If you are a non-taxable online recipient, you don't have to pay any tax under reverse charge. Then this was newly added. Author giving services to a publisher, the publisher will have to pay taxes under reverse charge. However, author also has an option to pay tax under forward charge. Okay, so this is all about your section number 9. Section number 9 is charge under GST law. What is important? 9.5 is important, and 9.3 reverse charge services are very, very important. Let us take a quick break and discuss the remaining topic. Hello friends, welcome back. Let us continue our discussion. So now the next topic for our discussion is composition levy. Fantastic topic, composition levy. Only one section, section 10, talks about composition levy. So under GST law, if you take registration, normally if you take registration, you'll be a regular dealer, but one more type of dealer you can become under GST law. That type of dealer is called as a composition dealer. You can opt for composition scheme. Section 10 talks about this composition scheme. What is section 10 talking all about? Let us see. Section 10 subsection 1 talks about eligibility. Who is eligible to become a composition dealer? Who is eligible, sir? Who is eligible to become a composition dealer? Section 10 subsection 1 says a registered person whose aggregate turnover in the preceding financial year did not exceed 1.5 crore rupees may opt to pay tax at composite rates in lieu of paying tax under section 9 subsection 1. Meaning instead of paying the tax at normal rates, you can opt to pay tax at composite rates if you are a registered person whose aggregate turnover in the preceding financial year did not exceed 1.5 crore rupees, and the limit is 75 lakhs for 8 special category states. Which are these 8 special category states for which limit is 75 lakhs, sir? The 8 special category states for which limit is 75 lakhs is Mast, Nagaland, Uttarakhand, Manipur, Meghalaya, Mizoram, Arunachal Pradesh, Sikkim and Tripura. For these 8 states, if you are doing business in these 8 states, then for you the limit will be 75 lakhs, and for other states in India the limit is 1.5 crores. So if you are a registered person whose aggregate turnover in the preceding financial year did not exceed 1.5 crores or 75 lakhs in 8 special category states, then you will be eligible to pay. You can opt for to pay the tax at composite rates instead of paying the tax at normal rates. Sir, what will happen if I opt to pay tax at composite rates? If you are a manufacturer, you will have to pay tax at 0.5% of turnover in the state, meaning 0.5% CGST plus 0.5% SGST. So effectively the rate will be 1%. If you are a restaurant or outdoor catering service provider, you will have to pay a tax of 2.5% of turnover in the state, and for all other dealers in goods, then it is 0.5% of taxable turnover in the states. Further, this limit, presently what is the limit? 1.5 crores. The government has the power to increase this limit up to how much, sir? Up to 2 crore rupees. So this limit can be increased up to 2 crore rupees, provided further that a registered person who opts to pay tax at composite rate under section 10 subsection 1 can also supply services. How much services can he supply? 10% of turnover in the state or union territory, or rupees 5 lakhs, whichever is higher. Okay, this amount of services also can be supplied by him. Now, the most important definition in your entire GST law is aggregate turnover. Section 2 clause 6 gives the meaning of this aggregate turnover. Aggregate turnover means what, sir? Aggregate turnover means aggregate value. Aggregate turnover means what, sir? Aggregate value of all taxable supplies, exempt supplies, export of goods or services, interstate supply to a person having same PAN. This aggregate turnover is required to be computed on all India basis, but it shall exclude the taxes under GST and inward supply liable for revert charge. Aggregate turnover means what, sir? Aggregate turnover means aggregate value of all taxable supplies, exempt supplies, export of goods or services, interstate supply to a person having same PAN. Whenever you are computing this aggregate turnover, compute it on all India basis or pan India basis. But when you are computing this aggregate turnover, please don't include two things, which is taxes under GST law and inward supply liable for revert charge. Sir, what do you mean by exempt supply? Exempt supply means supply of goods or services or both which are wholly exempt under section 11 of CGST Act or under section 6 of IGST Act. Supplies which attract nil rate of tax, and it includes non-taxable supplies. Sir, what do you mean by turnover in the state or turnover in the union territory? Basically, turnover in the state is aggregate turnover of that state. Meaning what, sir? All the taxable supplies and exempt supplies made within that state or from that state, but it shall not include taxes under GST law and inward supply liable for revert charge. Now, section 10 subsection 2 talks about conditions. Once I opt for composition scheme as per section 10 subsection 1, once I become eligible for composition scheme, I'll have to satisfy or I'll have to fulfill some conditions. So these are the conditions which will be applicable to me if I want to become a composition dealer. What are the conditions? He in the sense composition dealer. Composition dealer should not be engaged in supply of services other than those services mentioned in section 10 subsection 1. So if you're a composition dealer under section 10 subsection 1, if you opt for composition scheme under section 10 subsection 1, you cannot supply services other than that mentioned in 10 subsection 1. What is mentioned in 10 subsection 1? Restaurant and outdoor catering, or up to 10% of turnover, or 5 lakh rupees, whichever is higher. Okay, so a registered person, if you will be eligible to opt for composition scheme if you don't supply services other than those mentioned in 10 subsection 1, if you're not making non-taxable supplies, if you're not making interstate outward supply, and if you're not supplying services through an e-commerce operator who is required to collect the taxes under section 52, and if you're not manufacturing notified goods, as well as if you are not a casual taxable person and non-resident taxable person. So see that these are the conditions you should satisfy. You should not supply services. You should not make interstate outward supply. You cannot sell outside your state. You can purchase from another state, but you cannot sell outside your state. Then he shall not supply through an e-commerce operator who is required to collect taxes under section 52. Then you cannot manufacture notified goods, which is ice cream, pan masala, tobacco products, aerated waters, and bricks, roofing tails, etc. Bricks, roofing tails, etc. And you cannot be a casual taxable person and non-resident taxable person. Meaning what, sir? If you're a casual taxable person or non-resident taxable person, you cannot opt for composition scheme at all. Then, provided that section 10 subsection 2 has a beautiful proviso which says, if there are more than one registered person under same PAN, if one is opting for composition scheme, others also should opt for composition scheme. So if there are more than one people registered under a single PAN, if there are more than one registered person under same PAN, then if one opts for composition scheme, others also should opt for composition scheme. So for example, Dilip has Priya Sarees, two different Priya Sarees. One is whether it is in same states or different states, it does not matter. If I have taken separate registration, can I offer composition scheme for one business and normal scheme for another business? Answer is no. If one is opting for composition scheme, others also should opt for composition scheme. If one is opting for regular scheme, others also should opt for regular scheme. That is what this proviso is telling. Section 10 subsection 3 says composition scheme will lapse. Meaning your composition scheme, if you have opted for composition scheme, your composition scheme shall lapse. It shall expire in the current financial year if your aggregate turnover crosses that specified limit. If your turnover crosses that specified limit, then your composition scheme shall lapse. What is that limit, sir? That limit is 1.5 crores or 75 lakhs or 50 lakhs in case of supply of services. Then section 10 subsection 4 says a composition dealer cannot issue tax invoice. He cannot collect taxes on his supply. That means what, sir? He cannot issue tax invoice, and a composition dealer cannot take input tax credit. If you're a composition dealer, you cannot take input tax credit benefit, and you cannot issue tax invoice. Section 10 subsection 5, notice by proper officer. Notice by whom, sir? Notice by a proper officer. If the proper officer has now what is this section 10 subsection 5 telling? The GST officer, also called as proper officer, may give you a notice to you if he feels that you have opted for composition scheme, even though you are not eligible to opt for composition scheme. You'll have to reply to that notice. If your reply is satisfactory, very good. If your reply is not satisfactory, he'll ask you to pay the taxes at normal rates, and also penalty provisions may apply. So if the proper officer has a reason to believe that a taxable person has paid the tax under section 10 subsection 1 or section 10 subsection 2a, despite not being eligible, even though he was not eligible, he's paying taxes under section 10, then proper officer will send a notice to such person, and such person shall, in addition to the tax payable by him under the provisions of this act, will also liable to pay penalty under 73-74. Now, there is also composition scheme applicable to service provider. If you are a service provider, normally section 10 subsection 1 says only if you are a dealer of goods you can become a composition dealer, except restaurant services. But for other dealers, if you are a dealer of services, can I become, if I am a service provider, not a dealer of services, if I am a service provider, can I become a composition dealer? Lawmaker says yes, you can become a composition dealer as per section 10 2a. Composition scheme under section 10 subsection 10 2a, composition scheme for service provider. Who are the persons who are eligible to become a composition dealer as per section 10 2a? If you are a registered person who is not eligible to become a composition dealer as per section 10 subsection. If you cannot become a composition dealer as per section 10 subsection 1 or section 10 subsection 2, and your aggregate turnover in the preceding financial year did not exceed 50 lakh rupees, then you can opt to become a composition dealer under section 10 2a. You will have to pay a tax of 3% of turnover in the state, 3% CGST and 3% SGST, and whatever conditions were applicable to a normal composition dealer will also apply to you. Then, sir, are there any other conditions which a composition dealer has to fulfill or satisfy? Answer is yes. What are the different conditions, sir? A casual taxable person and non-resident taxable person cannot become composition dealer. Yes, sir, we know this. Now, if a composition dealer is taking any services on which the tax is required to be paid under reverse charge under section 9 subsection 3 and 9 subsection 4. So normally, composition dealer has to pay tax at what rates, sir? At composite rates. Now this tax is required to be paid by him on his outward supply, on his sales. On his outward supply, he has to pay the taxes at composite rates. But if he is having any inward supply, no. If he is having any inward supply, if he is having any purchases on which he is liable to pay under reverse charge, on those purchases he will have to pay tax at regular rates only. Okay, then a composition dealer will have to mention the word composition taxable person on every notice board and signboard which is displayed by him at his principal place of business. And a composition dealer will also have to mention the word composition taxable person not eligible to collect taxes on supplies on the bill of supply which is issued by him. A composition dealer cannot give tax invoice. So what is the document which he is going to give? He is going to give a document called as bill of supply. So whatever bill of supply he is issuing, on that bill of supply, he'll have to mention this word composition taxable person not eligible to collect taxes. Now, other points with respect to composition dealer, he has to file a return called as GSTR4. This return is required to be filed by him yearly once, annually, and he will have to make the payment of taxes on quarterly basis. What is this form by which he is going to make the payment of taxes, sir? Form GST CMP 08 is the form by he is going to make the payment of taxes on quarterly basis. GSTR 4 is required to be filed by him yearly once, and the due date is 30th April of next year. And GST CMP 08, which is the quarterly payment of taxes, this quarterly payment is required to be done by 18th of next month following the quarter. Okay, Nagaland, Uttarakhand, Meghalaya, Manipur, Mizoram, Arunachal Pradesh, Sikkim and Tripura are 8 special category states for which limit is 75 lakhs. Now, very important point. Interest income which is there, no, interest income should not be considered. So, if a person is having any interest income while computing the value of aggregate turnover, while computing the value of turnover in the state, or while computing the value of supply of services. Okay, while computing the value of supply of services. So while computing the value of aggregate turnover to check whether a person is eligible to become a composition dealer or not, or while computing the value of this services, how much can be provided by him, or while computing the turnover in the state or union territory, etc. Okay, for computing the tax liability, in all these cases, interest income should not be taken into consideration. You should not include interest income. You should not include interest income while computing these amounts under a composition scheme for a composition dealer. Okay, this is a very beautiful topic, very simple topic. This is all about section 10, which is composition scheme or composition levy. Next is section 11. Now in the flow, if you see, next is section 11. Section 11 talks about exemptions. Exemption we'll discuss at the end because it is one separate topic which is very lengthy. Now next topic which we are going to start is section 12. 12 talks about what's the time of supply. Section 12 talks about what? Time of supply. Section 12, 13 and 14. These three sections, very easy section again. They talk about time of supply. Section 12 talks about time of supply of goods. Section 13 talks about time of supply of services. And section 14 talks about time of supply whenever there is a change in rate of tax. Now what is section 12 telling? Section 12 says time of supply of goods. Now what is this time of supply basically, sir? Time of supply topic says when are you liable to pay taxes to the government? Meaning time of supply. See, whenever there is a supply, I'll have to pay the taxes to the government. Correct, not correct? The taxable event under GST law is supply of goods or services. So whenever I make a supply, I will have to pay the taxes to the government. Now, at what point in time the supply took place? So there will be series of events which takes place whenever there is a transaction of supply of goods or services happening. The first a purchase order will be received, then you will supply the goods, these goods will be delivered, then the payment will be made, the payment will be credited to the bank account, etc. So there are a series of events which happens in a business transaction. Now at what point in time did the supply happen? That is very important to be known, because at the point in time when supply took place, that time only you will have to pay taxes to the government. So what is that point in time? This topic is going to tell us. Section 12, 13 and 14 talks about time of supply. Section 12 talks about time of supply for goods. Section 12 subsection 1 says the liability to pay tax in case of supply of goods shall be the time of supply as determined under section 12. So if you want to know when you are liable to pay taxes in case of supply of goods, then please go talk to section 12. It will tell you when you are liable to pay the taxes under section when you are liable to pay the taxes in case of supply of goods. Section 12 subsection 2 talks about forward charge. In case of forward charge, when are you liable to pay the taxes? In case of forward charge, lawmaker says check whether the invoice has been issued within the due date specified under section 31 or invoice is not issued within the due date specified under section 31. If the invoice has been issued within the due date specified under section 31, say for the supply which you are making, the supply of goods which you are making, if the invoice for that supply is given by you within the limit specified under section 31, then the time of supply will be date of invoice or date of payment, whichever is earlier. But if the invoice is not issued by you within the limit specified, within the due date specified under section 31, then the time of supply will be the last date to issue invoice as per section 31 or the date of payment, whichever is earlier. So check whether invoice is issued within the due date or not issued within the due date. If it is issued within the due date, date of invoice or date of payment, whichever is earlier. Not issued within the due date, last date to issue invoice or date of payment, whichever is earlier. Now, what is the due date for issuing invoice, sir? In case of goods, what is the due date for issuing invoice? Section 31 gives the due date for issuing invoice in case of goods as well as services. Section 31 says, in case of goods, check whether the supply which you are making involves movement in goods. If it involves movement in goods, then the invoice is required to be issued on or before removal. If it does not involve movement in goods, then the invoice is required to be issued on or before delivery of such goods. If it is a case of continuous supply of goods, then the invoice is required to be issued on successive statement date or on successive payment dates, whichever is earlier. And if it is a case of sale on approval basis, invoice is required to be issued on the date of approval or 6 months from the date of removal, whichever is earlier. Now, in case of goods, there is also a notification number 66/2017. Fantastic notification, most important notification, which says if you receive any advances for supply of goods, if you receive any money, in simple words, if you receive any money before supplying the goods, then the date of receipt of that money will not be taken as time of supply. See, normally time of supply is date of payment or date of invoice or date of payment, whichever is earlier. So if the date of payment is before invoice, then this date of payment cannot be taken as time of supply. Similarly, if invoice is not issued within the due date, time of supply is last date to issue invoice or date of payment, whichever is earlier. But if the date of payment is before last date to issue invoice, it will not be taken as time of supply. Why, sir? Because this notification is telling. Notification number 66/2017 says if any money is received before making the before generating invoice or before last date to issue invoice, then the date of that payment will not be taken as time of supply. This provision is applicable in case of supply of goods except in case of specified actionable claims. Meaning for specified actionable claims, if any payment is before supply, then also it will be taken as time of supply. What is specified actionable claims? Lottery, betting, gambling, horse race, online money games, and casino. Because of this reason, this proviso is no more applicable for goods. Sir, you say date of payment. What do you mean by date of payment, sir? Date of payment means the date, a book entry date or bank credit date, whichever is earlier. In simple words, the date on which the entry has been passed in the books of accounts, or the date on which the amount is getting credited to the bank account, whichever is earlier, shall be taken as date of payment. Now, in case of reverse charge of goods, what is the time of supply? In case of reverse charge, the time of supply will be date of receipt of goods. If that is not available, date of making the payment. If that is also not available, 31st date from the date of supplier invoice, whichever is earlier. Meaning, the date when the goods is received by you, you'll have to make the payment of taxes. Sir, what if date of receipt of goods is not available? No problem. Then the date of making the payment. Sir, what if the date of making the payment is also not there? Then whatever document is given by the supplier, either the invoice or debit note or any other document issued by the supplier, from there take 31 days. That date you'll have to make the payment of taxes. That is the date of time of, that is the time of supply in case of supply of goods under reverse charge. Section 12 subsection 4 talks about vouchers. In case of vouchers, what is the time of supply, sir? Now check whether the voucher which is issued, is it a supply identifiable voucher or supply not identifiable voucher. For example, I give you a voucher and I give you a voucher of Puma store. I tell you that you can purchase only Puma shoes. So in this case, it is a supply identifiable voucher. I give you a voucher of Puma store and I say you can purchase anything in Puma store. So you can purchase shoes, belt, bag, shorts, etc. Correct? So this is a supply not identifiable voucher. So the time of supply in case of voucher, if it is a supply identifiable voucher, the date of issue of voucher will be taken as time of supply. If it is a supply not identifiable voucher, time of supply will be the date of redemption of such voucher. Date of redemption of such voucher. Then section 12 subsection 5, residual cases. If you are not able to determine the time of supply as per above sections, section 12.2, 12.3, 12.4, then you come to 12.5. What is 12.5 telling? Are you a person who is liable to file returns? Yes. Then due date of filing returns. And in all other cases, it is the date of making the payment of taxes. Section 12 subsection 6, interest penalty late fee for delayed payment of consideration. So if there is any interest penalty late fee for delayed payment of consideration, then for that amount, the time of supply will be the date of receipt of such amount. Whenever you receive this amount, that date will be taken as time of supply. Time of supply in case of services. Section 13 talks about time of supply in case of services. Section 13 subsection 1 says the liability to pay tax in case of supply of services shall be the time of supply as determined under section 13. In case of forward charge, the time of supply will be check invoice is issued within the due date or not issued within the due date. If the invoice is issued within the due date of invoice or date of payment, whichever is earlier, and if invoice is not issued within the due date, then date of completion or date of payment, whichever is earlier, will be taken as time of supply. So check what, sir, whether the invoice has been issued within the due date or invoice is not issued within the due date. For supply of services, whether the invoice has been issued within the due date or not. If it is issued within the due date, then the time of supply will be date of invoice or date of payment, whichever is earlier. Sir, what if it is not issued within the due date? Date of completion or the date of payment, whichever is earlier, will be taken as time of supply. Sir, what is the time limit for issuing invoice in case of services? The time limit for issuing invoice in case of services is, or the last date to issue invoice as per section 31 in case of services is, in normal cases, on or before completion or within 30 days from the date of completion. And in case of continuous supply of services, now this 30 days shall be replaced by 45 days in case of banking company, financial institution, insurance companies, etc. And in case of continuous supply of services, the time of supply will be due date of payment is not known on or before that date. If the due date of payment is not known on or before the date of receipt of that amount, and if the payment is linked to completion on or before completion, the time of you are required to issue the invoice. Okay. Now, in case of services, there is this proviso applicable which says if the supplier receives any amount up to ₹1,000. So if the supplier, the person who is giving the services, if he receives any amount up to ₹1,000 in excess of the invoice value, then the time of supply for such excess amount shall be what, sir? The date of issue of invoice for that excess amount, and this will be at the option of supplier. For example, it may happen that you have received some telephone bill. Okay, the telephone bill amount is 1564. Now you would have paid 1,600 rupees, and that Supplier is telling, sir, I don't have change, sir. What will happen to that extra 36 rupees you have paid, sir? That will be adjusted in your next month's invoice. So for that extra 36 rupees which you have paid, the time of supply will be at the option of supplier, the date of issuing invoice for that extra amount, which is the next month invoice, etc. So this is applicable only if the extra amount which is paid by you is up to 1000 rupees. If it is more than 1000, then you apply the normal provisions. Section 13 subsection 3, in case of reverse charge, what is the time of supply, sir? In case of reverse charge, the date of making the payment or 61 days from the date of supplier invoice, whichever is earlier, will be taken as time of supply. So reverse charge means what, sir? Say your legal services given by advocate to business entity has to pay the taxes. So when will it have to pay the taxes? The date when the business entity is making the payment to advocate, or 61 days from the date of the invoice issued by advocate, whichever is earlier. Now, in case of importation of services from associated enterprises, the time of supply will be the date of making the payment to that associated enterprises or the date on which entry has been made in the books of accounts of the recipient, whichever is earlier. Then for next 3 points, it is same. In case of vouchers, if it is supply identifiable voucher, date of issue of voucher. Supply not identifiable voucher, date of redemption of voucher will be taken as time of supply. Then in residual cases, if you are a person liable to file returns, then the due date of filing returns, and in all other cases, the date of paying the taxes will be taken as time of supply. And section 13 subsection 6, in case of interest, penalty, late fee for delayed payment of consideration, the time of supply will be the date on which that amount is received. Next point is with respect to section 14. What is section 14 talking about, sir? Section 14 talks about time of supply of services. Section 14 talks about what, sir? Time of supply whenever there is a change in rate of tax. For example, government says from 1st of November, the tax rate on mobile phones shall change from 18% to 28%. Now the question is whether whenever, say for example, I would have purchased mobile phone, I'm a dealer of mobile phone, I would have purchased mobile phone before the change in rate of tax and sell after the change in rate of tax. Now what is the provision applicable? What rate should I apply? 18%, 28%? If you want to know that, please refer to the provisions of section 14. Section 14 says, see, whenever there is a change in rate of tax, there are two possibilities. Whenever there is a change in rate of tax, there are two possibilities. You can make the supply either after change in rate of tax, or you can make the supply either before the change in rate of tax. Meaning what, sir? Say the rate of tax got changed over here. Okay, 111. Okay, rate of tax got changed over here. Now you can make the supply before the change in rate of tax, meaning the supply is made before the change in rate of tax, or the second option is the supply is made by you after the change in rate of tax. Now, in this, there are various different categories. Say invoice is also issued before the change in rate of tax, but payment is after change in rate of tax, or invoice payment is before, invoice is afterwards, etc. So there are separate categories, and totally there will be 8 cases. The crux of this, I'll tell you. What is the crux of this? All the 8 cases whenever there is a change in rate of tax. Whenever there is a change in rate of tax, what is important over here is the date when the supply took place. The date of supply will never become time of supply. So there will be 3 things involved. Okay, there will be supply dates, invoice date, and payment dates. So there will be supply date, invoice date, and payment dates. The date when the supply took place, that date will not be taken as time of supply. Just a second, I'll show you the detailed discussion part. One second. Whenever there is a change in rate of tax. Now, section 14 talks about time of supply whenever there is a change in rate of tax. So there are 2 possibilities. One, supply is made before the change in rate of tax, or supply is made after the change in rate of tax. Now, case number 1, supply is before change in rate of tax, and the payment is also before change in rate of tax, but the invoice is after change in rate of tax. In this case, time of supply will be the date of payment. Similarly, case number 2, supply is before change in rate of tax. So over here, in all the 4 cases, what is happening, sir? The supply is made by you before change in rate of tax. So if you see, this is the date when the rate of tax got changed. So, and the supply is before change, supply is before change, supply is before change, supply is before change. Correct? Now, if the supply is before change and payment is also before change, but the invoice is after change, the time of supply will be date of payment. Supply is before change, invoice is also before change, payment is after change, time of supply will be date of invoice. Supply is before, invoice and payment is after change, time of supply will be date of invoice or date of payment, whichever is earlier. Supply, invoice and payment, all of them are after before change in date of tax, time of supply will be date of invoice or date of payment, whichever is earlier. In simple words, whenever there is a change in rate of tax, the date of supply will never become time of supply. If you see, nowhere the date of supply has become time of supply. Even in this case, nowhere the date of supply has become time of supply. Therefore, who can become time of supply? Either invoice will become time of supply or payment will become time of supply. Either invoice or payment, date of invoice or date of payment will become time of supply. Now here, the important aspect is whoever is with supply is becoming time of supply. Now see, in first case, payment is with supply, so time of supply is payment. Invoice is in with supply, time of supply is invoice. Over here also, invoice is with supply, time of supply is invoice. Payment is with supply, time of supply is payment. Now whoever is with, see, date of supply will never become time of supply. Whoever is with supply will become time of supply. Sir, what if both of them are not with supply? Or what if all of them are together? If both of them are not with supply, or if all the three of them are together, then the time of supply will be date of invoice or date of payment, whichever is earlier. Date of invoice or date of payment, whichever is earlier. Date of invoice or date of payment, whichever is earlier. That will be taken as time of supply. Okay, not okay? Now, normally, what is date of payment? Date of payment is book entry date or bank credited, whichever is earlier. But however, in case of change in rate of tax, if the amount is getting credited to the bank account after 4 working days from the date of change in rate of tax, then the date of payment shall be the date of credited to the bank account. So, if there is a change in rate of tax and the amount is getting deposited to the bank account after 4 working days from the date of change in rate of tax, then the time of supply will be what, sir? Date of change in rate of tax. The date of payment will be what, sir? The date on which the amount is getting credited to the bank account. Next topic for our discussion is value of supply. Okay. Next topic is section 15. Fantastic topic. Name of the topic is value of supply. Nice and beautiful topic. Value of supply. Section 15. Now we understood what is the event because of which you are paying the taxes. Then section 9 told us what type of tax you have to pay, CGST, SGST, and section IGST, etc. Then we understood when should I pay the taxes to the government? When, in the sense, at what point in time supply takes place. Now, on what amount should I pay the taxes? If you want to know that, please ask this fellow. Who? Section 15. Section 15 talks about value of supply. Section 15 talks about value of supply. Section 15 says value of supply is what, sir? Section 15 says value of supply is transaction value. Section 15 says check whether there is a transaction between two people. If yes, whatever the value of the transaction is there, that will be taken as value of supply. Now, sir, what do you mean by transaction value? Transaction value means the price which is actually paid or which becomes payable for supply of goods or services or both, where the supplier and the recipient are not related. The price which is actually paid or which becomes payable, where the supplier and the recipient are not related, and the price which you are paying is the only consideration. It is the sole consideration. I'll repeat. Section 15 says value of supply is transaction value. What is transaction value? Transaction value is the price which is actually paid or which becomes payable, where the supplier and the recipient are not related, and the price which you are paying is the only consideration. It is the sole consideration. Section 15 subsection 2, inclusions in value of supply. What are the different things which are required to be included in value of supply? You are required to include, so to the transaction value, what are the different things which you are required to include? Section 15 subsection 2 says include all the taxes except the taxes under GST law if they are charged separately. Include any payment made by the recipient which the supplier had to incur. Include all the incidental expenses for anything done by the supplier for making the supply. Then include interest, penalty, late fee for delayed payment of consideration. Include subsidies which are directly linked to the price, excluding the subsidy given by central government or state government. Now, these are different 5 items which are required to be included. Now, one of the item which is required to be included in value of supply is what, sir? All the taxes except the taxes under GST law. Now, one very important point to be noted over here is that TCS which is collected by the supplier This TCS which is collected by the supplier should not be included in value of supply. This was one clarification which is given. Then, sir, is there anything which I can exclude from value of supply? Answer is yes, you can exclude something from value of supply. What is that something which I can exclude from value of supply, sir? Discounts. Now, discounts can be given before or at the time of supply. Any discount which is given before making the supply or at the time of making the supply can be excluded from value of supply if those discounts are shown separately on the invoice. And if there is any discount which is given after supply, then these discounts can be excluded from value of supply if three conditions are satisfied. Which are these three conditions? Which are these three conditions? That discount should be agreed between the supplier and recipient. It should be linked to a specific invoice, and the input tax credit on the discount amount should be reversed by the recipient. Now, section 15 subsection 4 says if you cannot determine the value of supply as per section 15, then please go refer to the provision. Go refer to the provisions of valuation rules as per CGST rules of valuation to determine the value of supply. And section 15.5 says government may notify value of supply in some cases, and government will tell you how to do value of supply in some cases. Now, what are the different rules for value of supply? Rule number 27 to rule number 35 talks about CGST rules talks about value of supply. Rule number 27 says what, sir? When is rule number 27 applicable? Rule number 27 is applicable when the consideration is not wholly in money. When is rule number 27 applicable? When the consideration is not wholly in money. If the consideration is not wholly in money, the value of supply will be what, sir? Open market value of that particular goods or services. If the money which you are paying, if the consideration which is there for a transaction is not fully in money, for example, I supplied some goods to you, for which, for example, I purchased a phone. This phone was worth rupees 25,000, for which I paid 20,000 rupees plus, for which I paid what, sir? 20,000 rupees plus I gave my old phone. In this case, can I say consideration is not wholly in money? If the consideration is not wholly in money, what is the value of supply, sir? The value of supply will be open market value. Sir, what if open market value is not there? If open market value is not there, then take the money amount, that is 20,000, and take fair value of this other consideration. Whatever other consideration you have given, what is the fair value of that other consideration? So if open market value is not available, then money plus fair value of other consideration. Sir, what if open market value is not there? Money plus fair value of other consideration is also not there. In such cases, take the value of like, kind and quality. Value of supply will be what, sir? Value of like, kind and quality. Is there any other phone like this or having similar quality, etc.? Then take the value of that phone. That will be the value of supply. Sir, what if that is also not there? Meaning what, sir? Open market value is not there. Money plus fair value of other consideration is not there. Value of like, kind and quality is also not there. In such cases, the value of supply will be money plus apply rule number 30 and 31 in that order for that other consideration. See, money is something which is already known. 20,000 is already known. For this other consideration is there. No, apply rule number 30 and then rule number 31. If you are able to find as per rule number 30, very good. If you are not able to find as per 30, then apply rule number 31 in that order. First apply 30 and then apply 31 to find the value of supply. What is rule number 30 and 31 telling? Rule number 30 talks about cost based valuation. Meaning it says no problem. If you are not able to find the value of any product, no, you just take the cost of that product, apply 10% to that. That will be the value of supply. If the value of supply cannot be determined as per the above rules, then the value of supply will be 110% of cost of production, cost of acquisition, or cost of provision of services. It will be how much, sir? 110% of cost of production. Whatever amount is involved, whatever amount is required by you for producing that particular product or acquiring that product or for providing that particular services. Take the cost, add 10% to that, that will be taken as value of supply. Sir, what is this rule number 31 telling then? Rule number 31 is a residual rule. Rule number 31 says, no problem, if you are not able to determine value of supply as per any of the above rules, meaning rule number 27 to rule number 30, then apply the principles and provisions of section 15 consistently and reasonably to find the value of supply. You just see what section 15 is telling you. 15 is telling the transaction value will be taken as value of supply, add inclusions, then exclusions, etc. Apply the principles of section 15 to find the value of supply. Now, rule number 28. Rule number 28 is applicable when you make a supply to your related person or to your distinct person referred to in 25.4 or 25.5. You remember I told you supply without consideration. I told you I gave sari to my wife free of cost. Correct. I am a sari dealer. I gave sari to my wife free of cost. It is a supply. Even though there is no consideration, it is a supply. Sir, if it is a supply, you have to pay GST. No, sir. Yes. Sir, on what amount, sir? This is the provision. Section rule number 28 says supply between related person or distinct person. The value of supply will be open market value. What is the open market value of that sari which is given by me to my wife? If that is not there, value of like, kind and quality. Value of like a sari like that having a similar quality. If that is also not there, apply rule number 3031 in that order to find the value. Then there is a proviso. There are two beautiful provisos for rule number 28. Rule number 28 proviso says, provided that where the goods are intended for further supply as such. If the goods are intended for what purpose, sir? For further supply as such, the value at the option of the supplier shall be the amount equivalent to 90% of the price charged by the recipient to his customer who is not a related person. What is this point telling? If the goods, if this proviso is applicable only for goods, if the goods are intended for further supply as such, if the intention of supplying those goods, if you are intended to supply those goods as such, then in such, say I have supplied some goods to my branch office free of cost, then in such case, and the branch office is going to supply those goods as such without making any changes, then whatever goods are supplied by me free of cost to my branch office, for that transaction, the value of supply will be amount charged by my branch office from their customer into 90%. Whatever 90, I have supplied some sarees to my branch free of cost. So Priya Sarees 1 has supplied sarees to Priya Sarees 2 free of cost. Now Priya Sarees 2 is supplying these sarees to its customer for say 100 rupees. In this case, for me, value of supply will be 90% of whatever is charged by Priya's, my branch office, from their customer. So value of supply will be what, sir? 90 rupees. So provided that where the goods are intended to be further supplied as such by the recipient, then the value of supply at the option of the supplier be an amount equal to 90% of the amount charged by the recipient from his customer who is not a related person. Then further, there is one more proviso which is a beautiful proviso. Normally, open market value means what, sir? Open market value means the amount which is charged for supply of that particular product, that particular goods or services from an unrelated person, and where the consideration is in money. Okay, so that is open market value, meaning the price at which this product is normally available in the market. Now there is a proviso which says, which is applicable only to rule number 28. This proviso is applicable to whom, sir? Only to rule number 28, which says, provided that where the recipient is eligible for full input tax credit, if the person to whom I am giving the goods, for example, Priya Sarees 1 gave it to Priya Sarees 2. If the Priya Sarees 2 is eligible for full input tax credit, if the recipient is eligible for full input tax credit, then the value declared on the invoice shall deem to be as the open market value. Then whatever value is declared by me on the invoice, that will only be taken as open market value. Then rule number 29. This rule number 29 is applicable when there is a supply made by principal to his agent or vice versa. In such cases, value of supply will be open market value or 90% of the amount charged by the recipient from his customer, not being a related person. If you are not able to find the value as per this point, then apply rule number 3031 in that order to find the value. Rule number 30 is cost based valuation and rule number 31 is residual clause. Now, you remember section 15 subsection 5, it says government may notify what is the value of supply in some cases. So what are these different cases where government has notified, sir? Rule number 31A says value of supply in case of lottery, betting, gambling, horse race. 31A. So government has told in case of lottery, whether it is run by state government or authorized by state government, the value of supply will be whatever face value of lottery ticket is there or whatever prize money is there into 100 rupees divided by 128, not 100 rupees into 100 divided by 128. Basically, lottery, betting, gambling, etc. all these are taxable at the rate of 28%. So in case of lottery, it is assumed that the amount which is paid by you for the ticket, lottery ticket, is inclusive of taxes. Therefore, remove the tax. Remove the tax. What is the tax rate? 28%. Therefore, remove the 28%. How will I remove, sir? Take the value of that lottery into 100 divided by 128. Whatever amount you are getting, that will be value of supply. But in case of betting and gambling, what is the value of supply? Whatever amount you are paying to the totalister for that betting purpose, whatever amount is paid to the totalister, 100% of that amount will be taken as value of supply. On the 28% you should apply. Sir, what about rule number 32 talks about what about money gaming, sir? Online money gaming. In case of online money gaming, total amount paid or which is payable to the supplier, or the amount which is deposited. For example, if I want to play this Rummy Circle, etc., whatever games are there, if I want to play money, I will have to deposit some money. Right? Whatever amount is deposited by you, that amount will be taken as value of supply. Sir, now from that amount I keep on winning. No, sir, that also will be added. Answer is no. Only what amount is deposited by you, that will be taken as value of supply. Similarly, in case of casino also, whatever amount is paid by you for purchase of chips or those tokens, coins, etc., that will be taken as value of supply. Now, next is rule number 32. Rule number 32 is an optional rule. Rule number 32 is an optional rule. This rule is normally applicable only if the supplier wants to opt for it. Okay. Rule number 32 sub-rule 1 says determination of value of supply in certain cases at the option of supplier. Rule number 32 sub-rule 2. If you are a forex dealer or a money changer, then you can always find the value of supply as per section 15. But if you don't want to follow section 15, you have an option to follow rule number 32 sub-rule 2. Rule number 32 sub-rule 2 says if you are a money changer or a forex dealer, the value of supply for you will be option number 1. Check whether the currency which is exchanged by you involves Indian rupees or it does not involve Indian rupees. If the currency which you are exchanging, if it involves Indian rupees, then check whether RBI rate is available or RBI rate is not available. Normally, RBI gives exchange rate only for 4 currencies, which is dollar, euros, pounds, and yen. But apart from this, there are other currencies also which can be exchanged. If you go to bank, they will exchange these currencies also. So, what they are telling, the currency which you are exchanging, no, if it involves Indian rupees, then check whether RBI rate is available or not available. If it involves Indian rupees, means what, sir? I am giving dollars and taking rupees. I am giving rupees and taking yen. So it involves Indian rupees. Now check whether RBI rate is there or not there. If RBI rate is available, whatever RBI rate is there, minus whatever rate is charged by the forex dealer, difference between this into number of units exchanged by you will be taken as value of supply. You should take positive figure. Then RBI rate is not available. If RBI rate is not available, no problem. What is the rupee value of currency exchange? For example, I exchanged 10 lakh rupees for dollars. I gave 10 lakh rupees and got dollars. Take that rupee value of currency exchange into 1% will be taken as value of supply. Sir, what if the currency which I am exchanging does not involve Indian rupees at all? For example, I am giving dollars and taking pounds. In such cases, they are telling take the rupee value of, what is the rupee value of dollars, what is the rupee value of pounds. Now compare both of them, take whichever is less. Into 1% will be taken as value of supply. Okay. Now they have one more option, which is slab rate system for money exchanges. They have one more option to find value of supply, which is slab rate system. They are telling depending upon how much currency you are exchanging, value will be taken. If the gross currency exchanged by you is up to 1 lakh rupees, then the value of supply will be 1% of gross currency exchange or 250 rupees, whichever is higher. But if the gross currency exchange by you is rupees 1 lakh to 10 lakhs, then the value of supply will be 10%, 1000 rupees for up to 1 lakhs. If the money which is exchanged is more than 1 lakh up to 5 lakhs, up to 10 lakhs, then it is 1000 plus 0.5% of gross currency exchange. For example, so if I am exchanging 5 lakh rupees, divide this into 2 arrow marks, 1 lakh and 4 lakhs. For 1 lakhs, it is 1000 rupees. And for 4 lakhs, it will be 0.5% of 4 lakhs, which is 2000 rupees. So totally it will be 3000 rupees. So what if I exchange more than 10 lakh rupees? If you exchange more than 10 lakh rupees, then 5500 rupees plus 0.1% of gross currency exchange or rupees 60,000, whichever is less, will be taken as value of supply. Sir, what if I am a travel agent? If you are a air travel agent, then only this option is applicable. Rule number 32 sub rule 3 is applicable only for air travel agent. Bus travel agent not applicable. Rail travel agent, it is not applicable. It is applicable only for air travel agent. So if it is a domestic booking, then 5% of base fare will be taken as value of supply. If it is an international booking, 10% of base fare will be taken as value of supply. Insurance business. If you are in which business, sir? Insurance business. Life insurance business. If you are in insurance business, which insurance business, sir? Life insurance business. If you are in general insurance, this provision is not applicable. Only if you are in life insurance business. Now, if you are in life insurance business, there can be 3 types of policy: investment policy, single premium policy, or risk policy. So in insurance business, what happens, sir? if I take a policy, I will have to pay insurance premium. Correct? Not correct? So how much on whatever premium is paid by me, on that, how, on what amount will I have to pay GST? That is the question over here. So if you are into insurance business, and if it is a life insurance business, check which type of policy it is. If it is a risk policy, I'm going ulta over here. If it is a risk policy, whatever premium is charged by the insurance company, that entire amount will be taken as value of supply. So if you have taken a policy, whatever amount of premium you are paying, that will be taken as value of supply. If the policy is what type of policy? Risk policy. If it is a single premium policy, wherein you have to pay premium only once, if it is a single premium policy, the value of supply will be the single premium which is charged. Whatever the single premium you are paying, no, that will be taken as value of supply. Sir, what if it is an investment policy, sir? If it is an investment policy, then check whether the amount allocated towards investment is intimated to you, or amount allocated towards investment is not intimated to you. If the amount which is allocated, apportioned towards investment is told or intimated to you, or it is not. If it is intimated to you, value of supply will be gross premium charge minus amount invested. If it is not intimated, for first year it will be 20% of premium charge, and for subsequent year it will be 12.5% of gross premium charge. Then rule number 32 sub rule 5 is applicable to whom, sir? If you are a second hand goods dealer, if you are a dealer of second hand goods, or it is a case of repossession of second hand goods. You are either a dealer of second hand goods, or you are a repossessor of second hand goods. In case of rule 32 sub rule 5, it says value of supply is very simple: selling price minus purchase price. What price you are selling that second hand goods, and what price you have purchased that second hand goods, that will be taken as value of supply. But if you are a repossessor of second hand goods, your purchase price will not be actual purchase price. It will not be actual purchase price. See, second hand goods dealer means what, sir? Say I am a normal individual. I had a car. Now I want to buy a new car. So this car which I already had, I am selling it to a second hand dealer. Correct? A person who is dealing in second hand cars. So when I sell to him, Cars 24, etc. Correct? Or Spinny, etc. These companies are there. So when I sell the car to him, he will pay some money to me. Say, assuming I had Sandro, and for that which I purchased for 5 lakh rupees, now he is giving me 1 lakh rupees for this. So for that person, for that Cars 24, the purchase price is how much, sir? 1 lakh rupees. For him, it is 1 lakh rupees. Now Cars 24 sells this car for 1,40,000 rupees. So what is the value of supply for them? 1,40,000 minus 1 lakh, which is 40,000 rupees. Now, what do you mean by repossession of second hand goods? Now, sometimes what may happen is I have purchased a new car by taking a bank loan. Now, I have not repaid the loan. What will bank do? They will take back the car from me. So the possession of car was with me. Now the car is repossessed by the bank. In that case, what is the value of supply, sir? Selling price minus purchase price. What is the value of supply? Selling price minus purchase price. Now over here, purchase price is required to be computed by you, because I have already used the car for some period of time. No, lawmakers are telling give depreciation for that. Reduce the value of that car for that period. So here, purchase price will be what, sir? Actual purchase price reduced by 5% per quarter or part thereof from the date of purchase till the date of sale. So from the date of purchase till the date of sale of that car, reduce 5% every quarter. Whatever amount you get, that will be taken as value of supply. Now please note. Rule number 32 sub rule 5 will be applicable to dealer or repossessor of second hand goods only if these two conditions are satisfied. What are these conditions? No input tax credit should be taken on these items, and these items should be supplied as such without making any changes. Rule number 32.6 and 32.7 not relevant from exam point of view. 32.6 talks about what is the value for a token. For example, you have got a gift voucher. What is the value of this gift voucher? The value of this gift voucher is the amount of goods which you can purchase by using this gift voucher. See, basically, gift voucher is a paper only. No? So what will be the value of that paper? Lawmakers are telling if the gift voucher is worth rupees 1,000, meaning if you can purchase products worth rupees 1,000 using this gift voucher, then the value of this gift voucher is 1,000 rupees. Rule number 32.7, they say taxable if notified services provider supplies services to distinct person where ITC is taken by them, the value of supply will be taken as nil. So it is not applicable in all the cases. It is applicable only in some scenarios. Rule number 33, important rule. Rule number 33 talks about pure agent. value of services supplied as a pure agent. If you supply, rule number 33 says, if you supply any services as a pure agent, then the value of that supply shall not be included while computing the value of supply. If you supply any services as a pure agent, if you supply any services as a pure agent, whatever amount is charged by you for that, whatever amount is charged by you for supplying that services as a pure agent shall not be included in the value of supply. For example, I am a chartered accountant. I file income tax return of my client. While filing income tax return of my client, I have purchased a digital signature for him. Now, whatever amount I have, now this normally section 15 says value of supply shall include all the incidental expenses for making the supply. Now, this DSC which is purchased by me, this is not something which is for me. This is for my client. But I have purchased from someone else on behalf of my client. In this case, lawmaker says the value of supply for the value of when you are computing the value of supply, the value of this DSC should not be included because this DSC is purchased by me as a pure agent. Value of supply of services in case of pure agent. Expenditure incurred by supplier as a pure agent of the recipient shall be excluded from value of supply if all these conditions are satisfied. If the supplier acts as pure agent of the recipient and the payment is made by the pure agent is indicated separately on the invoice, and the supplier has and the supplies procured by the pure agents are in addition to the services which is supplied by him. So these three conditions should be satisfied. What do you mean by pure agent? Pure agent means a person who is entering into a contractual agreement and who neither intends to hold the title of goods and services which is procured by him. He does not have any interest in the goods and services which is procured by him, and he receives only what is actually incurred by him. For example, for that pen drive, I charge only what is actually incurred by me. I don't charge any extra amount, etc. Then rule number 34. What is the exchange rate which I have to take whenever there is a transaction of import or export? In case of goods, take the exchange rate as per customs as may be notified by the CBIC. And in case of services, take gap rate, meaning generally accepted accounting principles or policies rate, meaning whatever rate is agreed between the supplier and recipient, that rate should be taken. And exchange rate as on which date you should take, sir? Exchange rate as on date of time of supply should be taken. Then, sir, what if the amount which is given is inclusive of taxes? How should I find the tax amount, sir? So if the amount is including taxes, say 118 rupees they have given and they tell 18% is the tax amount. 18% is the tax rate. Now, how will I find the tax amount, sir? So lawmakers are telling, take value including taxes into what is the tax rate divided by 100 plus tax rate. Or this is a very simple calculation. Say they say 236 rupees and they say it includes 18% GST. So now 236 rupees is the amount including GST into tax rate is 18 divided by 100 plus tax rate. Now what is the tax amount? Tax amount will be, if you do this multiplication, 36 rupees is the tax amount which will get over here. Now this is all about this beautiful topic called as value of supply. So we'll take a small break. One more break we'll take. We have discussed in this particular video, we have discussed what, sir? We have discussed composition levy, time of supply and value of supply. Now in next video, we'll continue with the other topics and complete our discussion on this beautiful indirect taxes for CA final students. Let me meet you in next video. Till then, bye. Hello friends, welcome back. Let us continue our discussion. So in our previous class, we completed the discussion on value of supply. Let us now continue with the next topic for our discussion, which is input tax rate. One of the most important topic is this topic, input tax rate. Now, section 16 to section 21. These are the different sections which are covered under this topic, which is input tax rate. Section 16 talks about eligibility and conditions. Who is eligible to take input tax rate and what are the conditions for claiming input tax rate is given under this section. Section 16 subsection 1 says eligibility. Every registered person is eligible to take input tax rate on goods or services or both which is used by him or intended to be used by him in the course or furtherance of business. So if you are a registered person, you will be eligible to take input tax rate on whatever goods or services you are using for your business purpose or you have an intention to use it for your business. Sir, what are the conditions for claiming input tax rate, sir? The conditions for claiming input tax rate are that the registered person who wants to claim input tax rate, he should be in possession of tax invoice, debit note or any other tax paying document. He should have actually received the goods or services except in bill to ship to concept. Then the supplier from whom is purchasing the goods and services, he should have paid the taxes, and the registered person, he should have filed the input tax. He should have filed the returns. Now there are two more new conditions which has been added, which is one of the very important conditions for claiming input tax rate, which are details of the invoice should be furnished by the supplier in his GSTR1, and the same should be communicated to the recipient or the registered person in his GSTR 2B or 2A. And the input tax rate which is communicated to the registered person, it should not be restricted. So totally there are 6 conditions which are required to be satisfied. I'll repeat once again. The registered person should be in possession of tax invoice, debit note, or any other tax paying document. He should have actually received the services except in bill to ship to concept. A supplier should have paid the taxes, filed the returns, and the supplier should have communicated the details in his GSTR1, and the same should be the same should be communicated to the registered person, and whatever details are communicated to the registered person, those should not be restricted. Now there are some there are some proviso to section 16, which says, provided that if you are receiving any goods in installments or in lots, then ITC can be taken upon receipt of last lot or last installment, provided further that if the recipient does not make any payment to the supplier within 180 days from the date of invoice, then whatever input tax rate has been taken, that is required to be reversed, and this reversal is required to be done along with it. And interest and one ITC can be taken once the payment has been made. So if you don't make the payment within 180 days, you'll have to reverse the input tax rate, and once you make the payment whenever in the future date, you can take the input tax rate. Now this restriction of 180 days will not be applicable in 3 scenarios: in case of RCM supplies, in case of deemed supplies, that is activities which are treated as supply even without consideration, and in case of addition which is made in value of supply because of payment expenses incurred by the recipient which the supplier had to incur. Now, sir, you said that if I don't make the payment within 180 days, I'll have to pay. I'll have to reverse the input tax rate along with interest. Sir, what is the rate of interest? Sir, the rate of interest is 18% per annum, and this interest is required to be calculated from which date to which date? Sir, interest is required to be calculated from the date of taking the input tax rate till the date of reversal of input tax rate. Sir, on what amount should I calculate the interest? Sir, you will have to calculate the interest on the unpaid amount, the tax, whatever tax is there on unpaid amount, on that amount you will have to calculate the interest. Then section 16 subsection 3 says, input tax rate on capital goods. Can I take input tax rate on capital goods? Answer is 100% yes. A registered person can claim input tax rate on capital goods. He can claim input tax rate on capital goods, provided he has not taken depreciation on the tax component of that capital goods. Then section 16 subsection 4 says, the last date for taking input tax credit. So if you have missed to take input tax rate against any invoice, then the last date to take input tax rate will be 30th November of next financial year, or the date of furnishing annual return for that financial year, whichever is earlier. So either 30th November or the date of filing annual return, whichever is earlier, you will have to take the input tax rate. Now, there is an exception. There will be no last date condition applicable for reavailment of input tax rate, which is reversed by you because of 180 days condition. Now, there are some rules also. There are some important rules. Rule number 36 gives you other documents based on which input tax rate can be taken. So you can take input tax rate based on tax invoice, RCM invoice, debit note, bill of entry in case of import of goods, and input service distributor invoice. Now, these documents should have some mandatory information. If you want to take input tax rate, then these documents which are there over here, they should have some mandatory information. What are those mandatory information, sir? They should have the amount of tax charge, the description of goods or services, the value of the supply, then GST number of the supplier and the GST number of the recipient, most important, and place of supply details in case it is an interstate supply. Now, there is one more new rule which has been inserted, very beautiful rule and very fantastic rule, rule number 37A. What is this rule number 37A telling, sir? If a registered person, now what is it telling? A registered person shall reverse the input tax rate on the supplies, the details of which is communicated to him by the supplier in GSTR1, but the tax was not paid by the supplier in his GSTR3B till 30th September following the end of financial year, by 30th September of next financial year. What is this point telling, sir? New rule, fantastic rule has been added. What people were doing was, say I make purchases from someone. Okay, I make purchases from someone. That person from whom I'm purchasing, he used to file his GSTR1. He used to file his GSTR1, but he was not making the payment of taxes by filing GSTR3B. Now, because of that reason, what is happening, sir? Since he filed his GSTR1, that the details were communicated to me in my GSTR2A and 2B. Based on that, I would have taken input tax credit. But that fellow has not paid the taxes at all. He has not filed his 3B at all. He has not paid the taxes at all. Lawmaker says, if he has not filed his 3B, if he has not paid the taxes, then I will have to reverse the input tax rate by 30th September of following the end of financial year. Then this was about last day to take input tax rate. Next point is with respect to section 17. What is section 17 talking all about, sir? Section 17 talks about apportionment of input tax rate and block rate. So if you are using a particular goods or services for taxable as well as a non-taxable purpose, or for business purpose and personal purpose, then what will happen to that input tax rates? It is required to be apportioned. Who is telling that? Section 17 is telling. Section 17 subsection 1 says, where goods or services are both or partly used for the purpose of business and partly used for any purpose other than business, then ITC shall be restricted to so much of input tax as attributable to business purpose, as attributable what's a business purpose. Section 17 subsection 2 says, if you are using any goods or services or both partly for making taxable supplies including zero rated supplies and partly for making exempt supplies, then ITC shall be restricted to so much of input tax which is used for making which is attributable to taxable supplies including zero rated supplies. Sir, what do you mean by zero rated supply? The meaning of zero rated supply has been given in section 16 of IGST law, which in simple words means the export of goods or services and supply made to an SEZ unit or SEZ developer. Now, section 17 subsection 2 says, if you have any common credit which you are partly using for taxable purpose and partly using for exempt purpose, then you'll have to take ITC proportionately. Now, what do you mean by exempt supplies? Sir, exempt supply means the supplies which are wholly exempt, supplies which are nil rated, and it includes non-taxable. Now, only for the purpose of section 17 subsection 2, exempt supply shall also include these 4 items. Normally, exempt supply means only 3 items: the supplies which are wholly exempt under section 11, the supplies which are nil rated, and it includes non-taxable supplies. But only for the purpose of section 17 subsection 2, for computing the exempt supply value in section 17 subsection 2, exempt supply shall also include supply on which you are liable to pay tax under reverse charge. Then sale of land, and sale of building subject to para 5B of schedule 2, and transaction in securities. They will also be treated as exempt supply. Then section 17 subsection 4. Now, normally what happens is, if you are making taxable as well as exempt supply, you will have to follow section 17 subsection 2. Now, in case of a banking company, financial institution, mostly the banking company is the major income of a banking company is interest income. And as you all know, interest income is exempt under section 11. By way of a notification, they have exempted, meaning that whatever interest income you are earning, that will be exempt. Now, this interest income may vary in case of bank, because some loan the bank would have been given wherein they are charging interest on daily basis, some loan on weekly basis, some loan on a quarterly basis, etc. So they are telling, in case of banks, no, section 17 subsection 4, you can opt for a banking company, financial institution, NBFC can opt for 17 subsection 4 instead of following section 17 subsection. So instead of following section 17 subsection 2, they can follow what's 17.4. What will happen if I follow 17.4? So a banking company, financial institution, or NBFC, they may opt for 17.4 instead of opting for 17 subsection 2, wherein whatever eligible input tax credit is there, 50% of that directly you take, and balance 50% shall lapse. You don't have to do the computation. You don't have to do the computation of how much exempt supplies you have made, how much taxable supplies you have made, accordingly proportionately you distribute. No. You don't have to do all those things. Directly, whatever eligible input tax rate is there, 50% of that you take, and balance 50% shall lapse. Now, this option, once exercised by you, will be applicable for the entire financial year, and this restriction of 50% will not be applicable in case of what's a supply made by one registered person to another registered person having. Then, one of the most important point in your input tax rate topic is the block credit, section 17 subsection 5, which talks about block credit. Now, what are the different items on which you cannot take input tax rate at all? That means what, sir? The items on which the input tax rate is blocked. Section 17 subsection 5 says, you cannot take input tax rate on motor vehicle which is used for transportation of persons having seating capacity not more than 13 including driver seat, except where it is used for further supply of motor vehicle or training in motor vehicle or transportation of passengers. So normally, if there is a motor vehicle which you are purchasing and whose seating capacity is less than 13 including driver seat, you will not be able to take input tax rate. But On that motor vehicle, you will be allowed to take input tax rate if you are involved in the business of further supply of motor vehicle or training in motor vehicle or transportation of passengers. Similarly, you will not be allowed to take input tax rates on vessels and aircraft, except where you are involved in the business of further supply of vessels and aircraft, training in vessels and aircraft, transportation of goods and transportation of passengers. Similarly, you will not be allowed to take input tax rate on service cost, repairs cost, insurance cost of motor vehicle, vessels and aircraft. However, you will be allowed to take input tax rate on service cost, repairs cost, insurance cost of motor vehicle, vessels and aircraft if ITC is allowed at the time of purchase of that motor vehicle, vessels and aircraft, or you are a general insurance company or a manufacturer of motor vehicle. Then you cannot take input tax rate on foods and beverages, outdoor catering, beauty treatment, health services, cosmetic surgery, plastic surgery, leasing, renting, hiring of motor vehicle, vessels, aircraft, and if you are into the business of life, if you are taking life insurance or health insurance, you on these items you are not allowed to take input tax rate. But you will be allowed to take input tax rate on these items if you are involved in the same line of business. Meaning what, sir? If I am a restaurant and I'm taking services from another restaurant, then I will be eligible to take input tax rate on that restaurant services. Similarly, you will not be allowed to take input tax rate on membership of club, health center, fitness center, and the travel benefit which is extended to employees. However, on both these items, you will be allowed to take input tax rate if there is a statutory obligation on the employer to provide the same way to the employee. For example, normally, if I provide any food to my employees, am I allowed to take input tax rate? Answer is no. But if there is some statutory obligation, say for example, there is a Factories Act which says, Mr. Dilip, it is your responsibility to give food to your employees. Now, because there is a Factories Act which is putting a responsibility on me to provide food to my employees, therefore I am giving food to my employees. In that case, I will be allowed to take input tax rate. Then I will not be allowed to take input tax credit on works contract, goods or services which is used for construction of immobile property other than plant and machinery. I will not be allowed to take input tax rate on goods or services on which I have paid taxes under section 10. I will not be allowed to take input tax rate. If you are a non-resident taxable person, you will not be allowed to take input tax rate on whatever goods and services are purchased by him or received by him when he is in India, except the goods which is imported by him. Then you will not be able to take ITC on goods or services which are used for your personal purpose, on the goods which are lost, stolen, destroyed, written off, or disposed of by way of gift or free samples. And on those items on which you have paid taxes under section 74, 129, and 130. Then, now, sir, you said apportionment of input tax rate. Whatever you told, that is only required to be followed for apportionment of input tax rate, sir. There are rules specified. Rule number 42 and rule number 43 talks about apportionment of input tax rate. Rule number 42 talks about apportionment of input tax rate in respect to inputs and input services, and 43 is applicable for apportionment of input tax rate with respect to capital goods. So if you have a common capital goods, or if you have any goods or services which you are commonly using for taxable and exempt purpose, or for business purpose and non-business purpose, for that apportionment there are two rules specified, rule number 42 and rule number 43. So rule number 42, what is rule number 42 telling, sir? Rule number 42, very simple. Rule number 42 says whatever total input tax rate you have for a particular tax period, you take that on input. Rule number 42 is applicable for apportionment of input tax rate in respect of inputs and input services. It is not applicable for capital goods. Okay, so what is rule number 42 telling? Rule number 42 says take your total input tax rate. From the total input tax rate, subtract the ITC which is exclusively used for non-business purpose, the ITC for on those goods and services which are exclusively exempted, and the ITC on those goods and services the credit of which is blocked under section 17 subsection 5. Once you subtract all these things, sir, why am I subtracting these things, sir? Because on these items you cannot take ITC at all. Are something which you are using only for non-business purpose, something which you are using only for exempt supplies, and something which is blocked under 17.5, on these items you cannot take input tax credit at all. So from your total, subtract these items on which you cannot take input tax rate. Then you will be left over with some items on which you are eligible to take input tax rate. From that, subtract the ITC on the goods and services which are exclusively used for making taxable supplies. Why, sir? Because on this you can take full input tax rate, because it is exclusively used for making taxable supplies. On this item you can take full input tax rate. Now whatever is left over, whatever input tax is left over, that will be the input tax on those goods and services which you are commonly using for making taxable supplies and exempt supplies, which you are commonly using for your business purpose and personal purpose. Now this common credit which is there, on that you can take input tax credit proportionately by following section 17 subsection 1, 17 subsection 2. Now how will I take that ITC, sir? They say the ITC which is attributable to exempt supply will be equal to whatever common credit you have into exempt supply for that particular tax period divided by total supply for that particular tax period. Then the ITC be attributable to non-business purpose. Since it cannot be measured, they are telling whatever common credit you have into 5%, give it to non-business purpose. Now once you apportion it to exempt supplies, once you apportion the common credit to non-business purpose, whatever is left over, the leftover ITC is the ITC which is eligible for you to be taken. That is the common credit which can be taken by you. Now this exercise you are required to do every month. Once you do it on monthly basis, at the year end, no, you are supposed to do this exercise for the entire year as well. Now similarly, sir, what about capital goods, sir? Rule number 43 talks about manner of determination of input tax rate in respect to capital goods. In respect of capital goods, what is it telling, sir? You take the total input tax rate on capital goods, all the different types of capital goods. From that, subtract the ITC on capital goods which is exclusively used for making exempt supply. Subtract the ITC on capital goods which is exclusively used for making taxable supplies, including zero rate supply. Sir, why am I subtracting, sir? Because if you subtract these two items, you will get your common credit, meaning you will get the credit on those capital goods which are used by you commonly for making taxable supplies as well as exempt. Now, whatever common credit you have got on capital goods, that you divide it by 60. You divide it by what, sir? 60. Meaning, why is that divided by 60? Because under GST law they say that the useful life of a capital asset is 5 years. 5 years is nothing but 12 months. Now, since ITC is taken by you on, since return is filed by you on monthly basis, they say that you please divide it by 60. Now, once you divide it by 60, you will get the common credit for of a capital goods for one particular month or one particular tax period. Now, this exercise you are required to do. And you are required to reverse the input tax rate. Lawmaker says you take full input tax rate on capital goods. Every month you are required to reverse the input tax rate proportionately by taking that common credit on monthly basis and multiplying what is the exempt supply for that particular month and divide it by total supply of that particular. So this exercise you are required to do till the useful life of that capital asset. Then we have section 18. Section 18 talks about what's a section 18 talks about input tax rate in special circumstances. What will happen to input tax rate in special circumstances? Section 18 subsection 1 says where a person has applied for where a person was liable for registration and has applied for registration within 30 days of becoming liable, or where a person has applied for registration on voluntary basis. Both of these people will be eligible to take input tax rate on whatever input they have 1 day prior to the date of effective date of registration. Similarly, if a person who was registered under section 10 becomes a regular dealer, or a registered person exempt supplies becomes taxable supplies, then these people can also take input tax credit on inputs held 1 day prior to the change, as well as capital goods held 1 day prior to the change. On capital goods, the ITC which is required to be taken by them should be reduced by 5% per quarter or part thereof from the date of purchase of that asset to the date of change. Then section 18 subsection 2 talks about input tax credit. Section 18 subsection 2 says under section 18 subsection 1, if the invoice is older than 1 year, then I will not give you input tax rate. Section 18 subsection 3 talks about input tax rate in case of change in constitution of business. So whenever there is a change in constitution of business by way of sale, merger, demerger, amalgamation, etc., with a specific provision for transfer of liability. So whenever the sale, merger, demerger, death of sole proprietor is happening, with a specific provision that the liabilities of old company also will be transferred to the new company, then the new company can take unutilized input tax rate which is available with the old company. Section 18 subsection 4 talks about reverse cases. What is this reverse cases, sir? Wherein a regular dealer is becoming composition dealer, or a taxable supplies becomes exempt supplies, then these people will have to reverse the input tax rate proportionately. And 18.5 talks about rules for 18.1 and 18.4. Section 18 subsection 6, most important section, section 18 subsection 6 says what, sir? In case you supply capital goods or plant and machinery, then you will have to reverse input tax rate. How much reversal I will have to make, sir? You will have to make a reversal based on calculation of tax. You will have to calculate the tax on transaction value or sale price of that capital goods or plant and machinery, or ITC on that capital goods or plant and machinery shall be reduced by 5% per quarter or part thereof from the date of purchase till the date of transfer. Now compare both of them, take whichever is higher. This is the amount of ITC which is required to be reversed by you whenever you supply a capital goods or plant and machinery. Then section 19 talks about uh, input tax credit in case of job work. So section 19 subsection 1, 2 and 3 says, section 19 subsection 1, section 19 subsection 2 and section 19 subsection 3 says the principal can take input tax rate on whatever inputs is sent by him to the job worker for the purpose of job work, and the principal can also take the input tax rate on whatever goods are direct inputs, whatever inputs are directly sent to the job worker for the purpose of job work. Now, whatever inputs are sent to the job worker should come back to the principal within the period of 1 year. It should come back to the principal within the period of 1 year. If it is not coming within the period of 1 year, then it will be deemed as supply. Similarly, 19.4, 19.5, 19.6 talks about capital goods. What is 19.4, 19.5, 19.6 telling? The principal can take input tax rate on capital goods which is sent to the job worker for the purpose of job work. 19.5 says principal can also take input tax rate on inputs which are directly sent to the job worker for the purpose of job work. Now, whatever capital goods are sent to the job worker under section 19.4 or 19.5, whatever capital goods are sent to the job worker should come back to the principal within the period of 3 years. If it does not come, sir, it will be deemed as supply. On the date when I am sending it, it will be deemed as supply as on that date. Then section 20 talks about what's section 20 talks about distribution of input tax rate by input service distributor. So input service distributor can distribute the input tax rate based on a document called as input service distributor invoice. How can he distribute, sir? If he has IGST credit, he can distribute that IGST credit as IGST or CGST. Similarly, if he has CGST credit, he can distribute that CGST credit as CGST or IGST. Now, how will the distribution happen? If the ITC is apportioned, if the ITC is with respect to one single particular unit, one single recipient, then that input tax should be distributed only to that single recipient. If the input tax is attributable to more than one recipient, then it should be distributed to all those recipients in the proportionately. And if the input tax is attributable to all the recipient, then it should be distributed to all the recipient proportionately. What is this proportionately, sir? You will have to take the proportion is required to be calculated based on the turnover of relevant period. Sir, what is this relevant period, sir? Relevant period means turnover of last financial year. Sir, what if turnover of last financial year is not there? Then based on the turnover of last quarter for which this data is available. Then section 21 talks about what, sir? Section 21 says if any excess ITC has been distributed by the input service distributor, then that is required to be reversed. This reversal which you are doing should be along with interest at 18% per annum. So the next topic for our discussion is a beautiful topic called as place of supply. So input tax rate is the next topic for our discussion. Is what's up? Place of supply. Place of supply section. Place of supply, fantastic topic, very easy topic, interesting topic. Section 7 of section 7 talks place of supply. Please note this is one single topic which you are required to study from IGST Act. Normally your entire GST law, whatever your sections you are studying, note that you are going to learn from CGST Act, but this is one topic alone which you are going to learn from which act, sir? You are going to learn from IGST Act, place of supply. Section 7, 8, 9, 10, 11, 12, 13, etc. Whichever section we are referring over here are the sections from which act? IGST Act. Section 7 of IGST Act gives a meaning of interstate supply, which says interstate supply means supply of goods or services or both where the location of supplier and place of supply is in two different states or two different union territories or one state and one union territory, or it is a case of import of goods or services or export of goods or services, or it is a case of supply made to an SEZ unit or SEZ developer. Then section 8 talks about intrastate supply. Section 8 says if you make any supply of goods or services or both where a location of supplier and place of supply is in same state or same union territory, then it will be called as intrastate supply. Now, why do we have to know whether a supply is an interstate supply or intrastate supply? Because if it is an interstate supply, you will have to pay IGST. If it is an intrastate supply, you will have to pay CGST, SGST, or CGST and UT GST. Section 9 says if there is any supply made if the location of the supplier or the place of supply is in territorial waters, then the location of the supplier or the place of supply shall be deemed to be the nearest coastal area. Next, Section 10 talks about determination of place of supply of goods where the supplier as well as the recipient both are in India, both are located in India. Section 10 subsection 1 clause A says where supply involves movement in goods, the place of supply will be the location where the movement is terminating or ending. Section 10 subsection 1 clause B says where the movement is caused by the party, where the movement is caused by whom, sir? Third party. The place of supply will be the principal place of business of the third party. Section 10 subsection 1 clause C says where the supply does not involve movement in goods, the location of the where the supply does not involve movement in goods, the play where the supply does not involve movement of in goods, the place of supply will be the location of the goods at the time of delivery. Section 10 subsection 1 clause CA, newly added section, which says if the goods are supplied to an unregistered person, if the goods are supplied to an unregistered person, then the place of supply will depend whether you have the address of that unregistered person or not. If the address of that unregistered person is recorded on the invoice, then the place of supply will be that address which is recorded on the invoice. And if the address of that unregistered person is not recorded on the invoice, the place of supply will be location of supplier. Similarly, in case of installation and assembly, in case of goods which are required to be installed or assembled at one particular location, the place of supply for those goods will be the location or the place where the installation or assembly is happening. And in case of supply of goods on board a conveyance, the place of supply will be the location where the goods are taken on board. Now, if you are not able to determine the place of supply for goods as per above provision, then you will have to determine it as per rules. As of now, they have not given any rules for goods. Section 11 talks about place of supply of goods in case where supplier or recipient, any one among them, is located in India. So either it can be import of goods or it can be export of goods. In case of import of goods, place of supply is location of importer, and in case of export of goods, location of exporter. Now there are some important definitions I have given over here. Export of goods means taking goods out of India from a place, taking goods out of India to a place outside India. Import means bringing goods into India from a place outside India. Export of services means supplier is outside India. Export of services means supplier is in India, recipient is outside India, place of supply is outside India, and the payment is received in convertible foreign currency. Import of services means supplier is outside India, recipient is in India, and place of supply is in India. Then non-taxable online recipient means any government, local authority, or individual who is not registered under GST law and who is receiving OIDAR services, which is online information database and access and retrieval services, for any purpose other than commerce, industry, or business. And OIDR service provider means what? OIDR service providers are like Swiggy, Zomato, Google, AdSense, etc. They are all OIDR service providers. Now, section 12 and section 13 talks about place of supply of services. 12 and 13, place of supply of services. Section 12 subsection. Section 12 talks about place of supply of services where the location of the supplier as well as the location of recipient both is in India. Section 12 subsection 1 says Section 12 will be applicable if supplier as well as recipient are in India. Section 12 subsection 2 is the general rule. So normally, if you provide any services, what will be the place of supply for services, sir? Now check whether you are providing the services to a registered person or a unregistered person. If you are providing the services to a registered person, the place of supply will be principal place of business of that registered person. If you are providing services to an unregistered person, then the place of supply will be check whether you have address of that unregistered person or not. If you have the address, then that address which is given by the recipient. If address is not there, then location of supplier. Then section 12 subsection 3. Section 12 subsection 3 talks about what, sir? It talks about place of supply of services for services directly related to immobile property. So if there are any services directly in relation to immobile property, what will be the place of supply? Now, for example, architect services, interior decorator services, or surveyor, constructor services, renting services, accommodation, etc. In all these cases, the place of supply will be the location or the place where the immobile property is located or intended to be located. Sir, what if the immobile property is located outside India, but the supplier and recipient are in India? In such cases, the place of supply will be location of recipient. Sir, what if the immobile property is located or intended to be located in more than one state or union territory? Then the place of supply will be proportionately each of that state or union territory. Then section 12 subsection 4 talks about place of supply for performance based services. So they have given list of totally 6 services like restaurant services, outdoor catering, personal grooming services, fitness, beauty treatment services. For these services, the place of supply will be location where the services are performed. Then section 12 subsection 5, in case of training and appraisal services, the place of supply, check whether the supply is made to a registered person or unregistered person. If the supply is made to registered person, location of registered person, and if the supply is made to an unregistered person, the location where the services are performed will be taken as place of supply. In case of admission to an event or amusement park, the place of supply will be the location where the event is held or amusement park is located. Section 12 subsection 7, in case of organization of an event, the place of supply will be check whether it is supplied to a registered person or unregistered. If it is to a registered person, location of that registered person. If it is to an unregistered person, location where the event is actually held will be taken as place of supply. Provided that if the event is held outside India and the supplier and the recipient are in India, place of supply will be location of recipient. And if the event is held at more than one location, place of supply will be taken proportionately. Then section 12 subsection 8, in case of transportation of goods services, what is the place of supply, including by mail and courier? If the services are given to a registered person, location of registered person. If it is given to an unregistered person, location of the goods, the location where the goods are handed over for transportation. Then in case of passenger transport services, what will be the place of supply? If it is to a registered person, location of registered person. If it is given to an unregistered person, the place where the passenger is embarking the conveyance for continuous journey. Now this provision is not applicable in case of right to passage. And similarly, if for goods, if the destination of goods is outside India, the place of supply will be the destination of goods. Then, sir, what about services given on board a conveyance, sir? What do you mean by this? Sir, I am sitting in an aeroplane, sir, and I am taking services when I am in the aeroplane, sir. Now, in such cases, when the services are given when you are on board a conveyance, the place of supply will be the first scheduled point of departure of such conveyance. What, sir? First scheduled point of departure of such conveyance. Next, section 12 subsection 11, place of supply of service in case of telecommunication services. If it is with respect to fixed line services, location where it is fixed. If it is postpaid, billing address, prepaid, whatever whatever is location of the person who is selling the voucher, which is nothing but location of supplier. And in case of online, whatever billing address is provided by you. Then, sir, what about the services which are given by banking company, financial institutions, or stockbroker, etc.? Yeah, if the location of recipient is available, then the with the supplier, then the location of recipient, and if it is not available, then the location of supplier. Sir, what about the services given by insurance company? If it is given to a registered person, location of registered person. If it is given to an unregistered person, location of the recipient as available with the supplier. And for advertisement services, they are given list. Okay, they have given it is in the rules. Then section 13 talks about determination of place of supply for services where either the supplier or the recipient, any one among them, is outside India. That is what section 13 subsection 1 is telling. Section 13 subsection 2 talks about general rule. Generally, what will be the place of supply in this case, sir? Place of supply in case either the supplier or recipient is outside India, any one among them is outside India, the place of supply will be location of recipient. Whoever is taking such services, where is that person located? His location will be taken as place of supply. Sir, what if location of recipient is not available? Then the place of supply will be location of supplier. Then section 13 subsection 3, performance based services. If there are performance based services, now check whether the services are performed on goods or on individual. If the services are performed on goods, check whether the goods are required to be made physically available for performing the services, or the services are given on goods through electronic means. If the goods are required to be made physically available, then the place of supply will be the location where the goods are made physically available, or the location where the services are performed. If the services are given through electronic mode, online means services are given with respect to a goods, etc., then the place of supply in such cases will be the actual location of the goods at the time of performance of the service. Now, sir, what if the goods are imported into India on temporary basis for the purpose of repairs, and then after doing that repairs, it is re-exported? In such cases, this provision shall not apply. You will have to apply general rule. What is the general rule relating place of supply is location of service recipient. Sir, what is the services are provided on services are provided with respect to an individual? So if the services are supplied to an individual or his agent, the place of supply will be, and if physical presence of such individual is required, then the place of supply shall be the location where the services are actually performed. And what if the services are with respect to immobile property? Place of supply will be the location where immobile property is located or intended to be located. Sir, what about admission to an event or organization of an event? The place of supply will be the location where event is held. Section 13 subsection 6 says if 13 3, 13 4, 13 5, if these three services are at more than one state or more than one location, including a location in taxable territory, the place of supply will be the location in taxable territory. And if they are in more than one state, then it shall be taken proportionately in each of those states. Section 13 subsection 8 important services, which talks about specified services. For they have given list of three services. For these three services, the place of supply will always be location of supplier. Which are these three services, sir? The services which are given by banking company, financial institution, NBFC. Then the services which are given by then intermediary services. Then the services of hiring any means of transportation other than aircraft vessel for a period up to 1 month. Then in case of goods transportation services, what is the place of supply? Location of destination of goods. In case of passenger transport services, location where the passenger is embarking the conveyance for continuous journey. And in case of services on board a conveyance, first scheduled point of departure of that particular conveyance. So what about OIDAR service provider? You said Ola, Uber, Netflix, etc. OIDAR service provider. What is the place of supply? The place of supply is location of recipient of services. Now, these were all your major important topics, and there is one topic which is exemption topic, which as you all know that exemption topic is a very big topic which we can discuss separately because it will break the flow, because the topic itself will take almost 1.5 hours. Okay, so these were all the major topics. Now after this, the topics which are starting will be your procedural related topic. Now some topics we'll discuss now, and then I'll make a separate video which I'll be uploading uh, very soon. I'll make a separate video wherein I'll discuss the other aspects of procedural, meaning that with respect to assessments, etc. That I'll discuss separately. Now, registration section 22 to section 30. Now, again, we are back to which act, sir? We are back to CGST Act. Section 22 to section 30 of CGST Act talks about registration. Section 22 talks about person who is liable for registration. Sir, who is liable for registration? Supplier of goods or services is liable to obtain registration in the state or union territory from where he is making taxable supplies if his aggregate turnover exceeds 20 lakh rupees. This limit is 10 lakh rupees in case of in 4 special category states, which is Make My Trip to Nagaland, which is what, sir? Which is Manipur, Mizoram, Tripura, and Nagaland. Then section 2 subsection section 2 subsection 22 says a person who was registered under pre-GST law should take registration under GST law compulsorily. Section 22 subsection, not 2, I told it has 2 clause 2. No, it is 22 subsection 2. Section 22 subsection 3 says where the business of a taxable person who is registered, where the business of a taxable person who is registered is transferred by way of succession or otherwise as a going concern, then transferee, that is the successor, will have to take registration from the date of transfer. Similarly, section 22 subsection 4 says, notwithstanding to whatever is given in section 22.1 or 22.3, if there is a scheme of amalgamation, merger, demerger which is sanctioned by High Court, then the transferee, the new company which is formed because of that reason, like a High Court order, that will have to take registration under GST law with effect from the date of certificate of incorporation of that particular company. Now there is an notification also issued wherein it exempted few people from taking registration under GST law. What is this notification number 10/2019 telling? Notification number 10/2019 says, I am applicable to those people who are exclusively involved in the business of supply of goods and whose aggregate turnover not exceeding rupees 40 lakhs. If you are exclusively involved in the business of supply of goods and your aggregate turnover is not exceeding 40 lakhs, then you are exempted from taking registration under GST law. Meaning up to 40 lakhs, you don't have to take registration if you are only supplying goods. But this notification number 10/2019 will not be applicable to those people who are required to take compulsory registration, to those people who are supplying notified goods, to those people who are supplying in the states of Nam Mast Time Pass, which is Nagaland, Uttarakhand, Manipur, Meghalaya, Mizoram, Arunachal Pradesh, Sikkim, Tripura, Telangana, and Puducherry. And it shall also not apply to a person who has opted for voluntary registration and want to continue with his registration. Similarly, sir, what is effective date of registration? We'll come to this point. Before that, we'll discuss the other points. Then, Section 23. Section 23 talks about what, sir, a person who is not liable for registration. Who is not liable to take registration under GST law? If you're an agriculturist who is supplying whatever is produced out of cultivation of land, or if you're a person who is involved in making non-taxable supplies, or if you're a person who is exclusively making exempt supplies, these people are not liable to take registration. And there are some more people whom government has notified who are not required to take registration. Those people who are making supplies which are taxable under reverse charge, those people who are making interstate taxable supplies, those people who are making interstate taxable supplies of handicrafted goods whose value is up to 20 lakh rupees. So if you are making interstate taxable supply of services up to 20 lakhs, no registration. Interstate taxable supply of handicrafted goods up to 20 lakh, no registration. And if you are a person who is making supply of services through e-commerce operator up to 20 lakh rupees, you don't have to take any registration. Then section 24 talks about compulsory registration. There are few people who are required to take registration under GST law compulsorily. Who are those people? A person who is making interstate taxable supply of goods, a casual taxable person making taxable supply, a person who is required to pay tax under reverse charge, non-resident taxable person, casual taxable person, then e-commerce operator who is required to collect the tax under section 51, e-commerce operator who is required to not collect the tax under 51, collect the tax under 52 and deduct the tax under section 51. A person who is supplying through that e-commerce operator, a person who is required to deduct the tax under section 51, correct? This should be 52. And the agent who is making taxable supply of goods or services on behalf of another taxable person, input service distributor, then OIDAR service provider, and all those people who are located outside India and involved in the business of online money gaming from a place outside India. Sir, what is the procedure for taking registration? Any person who is liable for registration under section 22 or under section 24 will have to apply for registration within 30 days of becoming liable. Now, this if you're a casual taxable person, you'll have to apply for registration 5 days prior to commencement of business. And if you have a place of business in special SEZ location or SEZ, if you are SEZ unit, then you'll have to take a separate registration for that particular unit. Then a person who is a person can take registration even though he is not liable on voluntary basis, and if a person normally for a single state only one registration will be given, but if you have more than multiple if you are doing businesses at multiple locations, then for those for those businesses which you are doing at multiple locations, you can take separate registrations. Then section 25.4 and 25.5 talks about deemed distinct person. Section 25.4 says if a person has obtained or is required to obtain more than one registration, whether in a state or union territory, then each of those registrations will be taken deemed as distinct person. 25.5 says if a person has an establishment registered in a state and also has another establishment in another states or union territory, this establishment shall be deemed as distinct person. Then PAN is other authentication is required to be done nowadays if you want other registration to be given to you in a very faster manner of time. Then PAN is compulsory for obtaining registration under GST law. If you don't have a PAN, then if you are a TDS or TCS purpose, then you will have to use your TAN instead of PAN for taking registration. Now, non-resident taxable person will not be having a PAN. So, for those people, there is a separate mechanism which is specified for taking registration. Meaning, these non-resident taxable person will have to give their valid passport and tax identification number of that country from which they are coming, and they will have to appoint a person in India as their authorized representative, and that person whom they are appointing should have a valid PAN. Then, a person who is liable for now, if you are a person who is liable for registration and if you don't apply for registration, then the proper officer may give you the registration. And United Nations organization or foreign embassies, etc., they will be given something called as unique identity number. They also are required to take registration under GST law, and when they take registration under GST law, they will be given something called as unique identity number. So normally, if we take registration under GST law, we will be given a GSTN, Goods and Service Tax Identification Number. But for United Nations organizations or foreign embassies, etc., when they take registration, they will get unique identity number. Now, this registration, whether granting the registration or rejecting registration, will completely depend upon after seeing your application. Now, if you are registered under SGST Act, it is deemed that you are also registered under Registries Act, which is nothing but CGST Act. Then Section 27, important section. Section 27 talks about special provision for casual taxable person or non-resident taxable person. If you're a casual taxable person or non-resident taxable person, then you will have to apply for registration 5 days prior to commencement of business. This registration will be valid for number of days you are applying or 90 days, whichever is less. You can extend your validity of registration for a further period of 19 days, and that extension can be done only once, and this extension also will be valid for 90 days or number of days you are opting, whichever is less. Now, this casual taxable person and non-resident taxable person will have to make the payment of taxes in advance, and in case they are extending, then for that extended period also they'll have to make the payment of tax in advance. Section 28 talks about amendment in registration. If there is any change in registration, if there is any change in information which is already given by you at the time of registration, then you will have to intimate that change by making an amendment in your registration. So this amendment can be in core field or non-core field. Amendment in non-core field does not require any specific approval from the tax authority or the proper officer, but if the amendment is in core fields, for example, you are changing the legal name of the business, principal place of business, or state where you are doing the business, etc. In such cases, this amendment is required to be approved by the proper officer to for the amendment to take place. Then section 29. Section 29 talks about what, sir? It talks about suspension or cancellation of registration. Section 29 says what? Cancellation of registration can be. Section 29 talks about suspension or cancellation of registration. Section 29(1) says registration can be cancelled by proper officer or registered person himself or his legal heirs if the business is discontinued, or if there is a change in constitution of business, or if the taxable person is no longer liable to get registered under section 22 or 24, or registration can be cancelled by the proper officer only if the registration has been if the registered person has contravened the provisions of the law, or a person registered under section 10 has not filed his return continuously for 3 tax periods. If a normal taxpayer has not filed his return continuously for 6 consecutive tax periods, and voluntarily registered person has not commenced the business for a period of 6 months from the date of taking registration, and if the registration has been obtained by way of fraud, misrepresentation, suppression of facts, etc. Then section 30 talks about revocation of cancellation. Now, whatever registration is cancelled by the proper officer, that can be revoked within 90 days. Within 90 days from the date of order of cancellation. Now, this period can be extended by 180 days in case by the commissioner in special circumstances. Now, there is procedure of registration given. I mean, state. Then we can ask you the forms, etc., but exact procedure will not be asked. Now, what is the procedure for taking registration, sir? There is a form called as form GST REC01, which you will have to on which you will have to make an application. This has 2 parts, part A and part B. Once you fill part B, Aadhaar authentication process is required to be done. Once that Aadhaar authentication is done, once you have done Aadhaar authentication, your application will be submitted to the proper officer, and you will get an acknowledgement number called ARN number in GST REC02. Now, once the application is submitted to the proper officer, he has 7 working days time to check your application and respond to you. Within 7 days, he is required to respond to you. Once he meaning either he will accept the application or he will ask for clarification. Now, once he asks for clarification, he will have to give an order for clarification in 03. You will have to respond to that clarification order in GST REG04. Whatever clarification is asked by him, you will have to reply that. Now, once you reply for that clarification, officer has 7 working days time to either approve your registration or reject. If he rejects, he will communicate the information is in GST REC05, and if it is accepted, then he'll communicate the details in GST REG06, meaning the registration certificate will be given to you. Now, next topic for our discussion is tax invoice, debit note, and credit note, which is nothing but all these are theoretical topics basically. Tax invoice, debit note, and credit note. What is the due date of issuing a tax invoice? If in respect of goods, if supply involves movement in goods on or before removal, if supply does not involve movement in goods or on or before delivery, if it is a case of continuous supply of goods, successive payment dates or successive statement dates, whichever is earlier, and in case of sale on approval basis, on or before approval or within 6 months from the date of removal, whichever is earlier. And in case of services, in normal cases, the invoice is required to be issued on or before completion or within 30 days from the date of completion. And in case of banking company, financial institution, this 30 days will be replaced by 45 days. In case of continuous supply of services, The due date of payment is ascertainable on or before the date. If due date of payment is not ascertainable on or before the date of receipt of payment, and if the payment is linked to completion on or before completion. Now, section 31 subsection 6, cessation of supply. Now, say for example, you are providing the services, and in between only the person to whom you are providing services says, I don't want services from you. In such cases, whenever there is a cessation of supply, when the supply has been stopped in between, then till that time you have provided the services, you will have to generate an invoice for that, and the value also will be determined proportionally. Now, basically, this chapter talks about different types of documents which are there, and uh, who should issue that document, in what circumstances this document will be issued. Tax invoice. Tax invoice is required to be issued by a person who is making taxable supplies. Now, in case you are supplying goods, you will have to issue the invoice in 3 copies, and in case you are supplying services, you will have to issue the invoice in 2 copies. Invoice number is required to be given by you mandatorily, and this invoice, the number should be unique for every financial year. It should have minimum 16 character. It should have maximum 16 characteristics. It can be alphanumerics or it can be numerics. This cannot have any special characteristics apart from hyphen or forward slash. Now, this invoice which you are giving should also contain HSN code. This HSN code, if your turnover is up to 5 crores, it will have to the invoice need to have 4-digit HSN code. If it is a B2B supply or B2C supply, but in case of B2C supply, it is optional. And if your turnover is more than 5 crores, you should compulsory have 6-digit HSN code on your supply. Now, a person will not have to issue any tax invoice, meaning individual tax invoice is not required to be issued by you if you are making supply to an unregistered person, value of supply is less than 200, and that unregistered person does not require any invoice. Now, instead of giving individual tax invoice, in these cases, you can give a consolidated tax invoice. No signature or digital signature is required if it is a computer generated invoice as per Information Technology Act. Then, revised tax invoice. Revised tax invoice means what, sir? Revised tax invoice. Revised tax invoice is a document which is required to be issued for the supply which is made from the effective date of registration till the date of grant of from the effective date of registration till the date of grant of registration certificate. Meaning, if there is any supply made by you from effective date of registration till the date of grant of registration, for whatever supply is made by you during this period, you will have to give a document called as revised tax invoice. This is required to be issued within 1 month from the date of obtaining registration certificate. Then again, same, no signature is required if it is a computer generated invoice. Bill of supply. Who is required to issue a bill of supply, sir? Bill of supply is required to be issued by a person who is making exempt supply or a person who is making supply taxable under section 10. Now, again, no signature is required if it is a computer generated invoice. Sir, what if I am making taxable as well as exempt supply, sir? Then you can give a document called as invoice cum bill of supply. Then receipt voucher. Who is required to give a receipt voucher, sir? If you are receiving any advances for making a supply, then you are required to give a document called as receipt voucher. Now, at the time of receipt of advances, in some cases, for example, in case of supply of services, you are also required to make the payment of taxes. So if you don't know the tax rate, pay the tax at 18%, and if you don't know the nature of supply, assume the nature of supply to be equal to the state supply. Then refund voucher is required to be given. Sir, when will refund voucher be given, sir? Refund voucher will be given if you have taken any advances, and against that advances you have not provided any services or you have not issued any invoice. In such cases, you will give a document called as refund voucher. Then payment voucher. So whenever you make a payment to that person whose supply are taxable under revert charge, you will have to give a document to him called as payment voucher. Then there is a new concept of e-invoicing. It is no more new, but there is a concept of e-invoicing which is introduced, wherein uh, for all the B2B supplies which is made by a registered person, he will have to authenticate this B2B supply on an invoice registration portal, and he will have to generate an e-invoice in form GST INV01. What happens over here, sir? You will have to go to invoice registration portal and register all the invoices, all the B2B invoices. You'll get invoice registration number. Who is required to, for whom is it mandatory? Invoicing is mandatory, sir. All those registered person whose aggregate turnover is more than 5 crore rupees, for them e-invoicing is mandatory. Now, are there any people for whom e-invoice is not applicable, sir? Yes, there are few people like SEZ units, insurance company, banking company, financial institution, goods transport agency, passenger transport service provider, cinema halls, multiplexes, and government departments and local authorities. For them, e-invoicing is not required. Then, delivery challan is required to be issued by you, or Rule 55 challan is required to be issued by you. Who is required to issue this delivery challan of Rule 55 challan, sir? When is it required to be issued? Whenever there is any movement of goods happening, you are required to issue this document. So if you are moving liquid gas where the quantity is not known at the time of delivery, where you are transporting the goods for the purpose of giving the goods to a job worker, where you are transporting the goods for any reasons other than supply, you'll have to give this document called as delivery challan. Delivery challan, whatever delivery challan you are giving, no, the delivery challan which you are issuing should be serially numbered. It should be in one or multiple series. It should be issued at the time of removal of those goods, and it should be issued in triplicates. Now, very important is this point with respect to a delivery challan or Rule 55 challan. The goods which are if the goods are transported by you in semi knockdown conditions or completely knockdown condition, then the supplier will have to issue a complete invoice before the dispatch of first consignment, and as and when the subsequent consignment is going, he will have to give delivery challan, giving reference to the original invoice, and the copy of corresponding delivery challan will be accompanied with the certified copy of invoice, and the original copy of invoice will go along with the last consignment. Okay, in simple words, when the goods are transferred by you in lots or installment, as and when each and every lot is going, no, you'll have to give a delivery challan for those lots, and this delivery challan should be accompanied with a certified copy of the original invoice, and original invoice is required to be sent by you only when the last consignment is going. Then lawmakers have told that there are some people who can issue some other document instead of tax invoice. For example, insurance company, banking company, etc. For example, a bank, it may instead of issuing a separate tax invoice, it can issue a bank statement, and in that bank statement only they can mention about what is the services given by them and what is the GST amount. And in case of cinema halls, etc., whatever that e-ticket they are issuing, chota sa ticket they are issuing, no, that only will be deemed as invoice. And for goods transport agency, very important is this point. Goods transport agency, they can issue a document called as consignment note instead of tax invoice. And this consignment note should contain the details of gross weight of consignment, name of the consigner, name of the consignee, registration number of goods carriage, details of goods which is transported, details of place of origin and place of dispatch, destination of goods, then GST number of the person who is liable to pay tax, and such other information as may be specified in rule number 46. Now, section 34 talks about credit notes and debit notes. Section what now? When is credit note required to be issued? Credit note is required to be issued to reduce the value of invoice which is already issued. So if you have already issued an invoice, and now if you want to reduce the value of that invoice, no, you will have to reduce the value by issuing a credit note. What is this point telling? If already an invoice has been issued by you and the taxable value declared in that invoice is more than the actual value, give a credit note. Tax rate declared in that invoice is more than the actual tax rate, then give a credit note. The quantity received by that recipient is less than the actual quantity displayed in the invoice, then give a credit note. Then if the quality of the goods is indeficient, then give a credit note, and if there is sales return happening, give a credit note. Now normally whatever credit note you are issuing, no, that credit note is required to be reported by you in your GST returns in the month in which the credit note is. But if you forget to report, then the last date for reporting is 30th November of next financial year, or date of filing annual return, whichever is earlier. Similarly, debit note is required to be issued by you if you want to increase the value of invoice which is already given. So if you want, if the taxable value declared by you on the invoice is less than the actual value, to increase that, you will have to give a debit note. The tax rate declared by the invoice is less than the actual tax rate, to increase that, you will give a debit note. And the quantity received is more than the quantity which is declared in the invoice, then you will give a debit note. Now, that is there any time limit for this also? Yes, you are required to report this debit note in the month in which they are issued by you. Now, section 32 prohibits unauthorized collection of taxes. You cannot collect, an unregistered person cannot collect taxes on the goods and services supplied by him, and a registered person cannot collect taxes more than what is required to be collected by him. Section 33 says the amount of tax is required to be indicated by you in the invoice or any other document which is issued by you. Then the next topic for our discussion is accounts and records. Accounts and records, who are required to maintain the books of accounts, and what are those accounts and records which is required to be maintained. Who is required to maintain books of accounts? 35 says every registered person is required to maintain books. Where is he required to maintain, sir? At the principal place of businesses. Sir, what if I have branch office or additional place of business? Then the books with respect to those additional place of business can be maintained over there only. Then what am I supposed to maintain? You will have to maintain true and correct accounts of production, manufacture, inward and outward supply, stock of goods, input tax credit availed by you, output tax, is payable and paid by you, and such other particulars as may be prescribed. Now, books can also be maintained in electronic form. Now, if you are a owner of a warehouse or a godown, or you are a transporter, then you should compulsory maintain the details of consignor, consignee, and other relevant documents with respect to such goods. Then, commissioner. The commissioner may also notify a specific class of registered person to maintain some other books of accounts. So, such class of registered person shall maintain additional uh, accounts and records as may be notified by him, and the class of registered person who shall maintain accounts in any other format. Now, section 35, subsection 5, which was with respect to GST audit, has been removed. It is no more relevant or not required anymore. Then, section 35, subsection 6, the proper officer shall determine the tax payable of goods or services if you are not maintaining books of accounts, if you are not accounting anything, the proper officer by himself will determine the tax which is payable by you, and he may also apply the provisions of section 73 or 74. Then, other accounts and records which is required as per rule number 35. As per rule number 35, they have also listed down rule number 56, sorry, not 35, 56. Rule number 56 is also listing other accounts and records which is required to be maintained by a registered. What are those? You are required to maintain some additional records, such as what, sir? Such as goods, if you have imported or exported any goods or services, details of those goods and services. If you have made any supply which is attracting reward charge, details of advance received, paid or adjusted, details of stock which is received, supplied, opening balance, taxes collected or remitted, and such other particulars. Records to be maintained by agent. What are the different records which are required to be maintained by agent? Particulars of authorization received by him. Then particulars, if you are an agent, you will have to maintain the details of whatever authorization you have received from different principals. Then particulars of description, value and quantity of goods and services which is received by you on behalf of principal. Then description, value and quantity of the goods and services which is supplied by you on behalf of the principal. Then the details of accounts furnished to every principal, and the taxes paid on the receipts of goods or services which is affected on behalf of principal. Then, if you are a manufacturer, you'll have to maintain the details of monthly production, quantitative details of raw material and services used for making the production, and quantitative details of goods which are manufactured, including waste and byproducts. Then, if you are a supplier of services, you'll have to maintain the quantitative details of goods which is used for making the supply of services, details of input tax, details of input services utilized by you, and the services which is supplied by you. Records to be maintained by person executing works contract. So if you're a works contractor, you will have to maintain the details of names and address of the person on whose behalf you are executing work, description, value and quantity of goods and services which is received or utilized by you. Then details of payment received in respect of each works contract, and name and address of the supplier from whom you are receiving those goods. And some other points with respect to accounts and records are: you can maintain accounts and records in electronic form. If you are maintaining, then it should be digitally signed. Then proper electronic backup should be kept for those books which are maintained in electronic forms. Entries which are erased by you, or which is effaced by you, or overwritten by you, should be properly uh, it should be all the incorrect entries otherwise than of critical nature should not be erased, effaced or overwritten. All the incorrect entries, okay, sorry, all the incorrect entries which are made by you other than those of clinical nature should be properly scored out. You should maintain a log of who is making the changes, etc. Where the registers and other documents are maintained in electronically, log of every entry edited and deleted should be maintained by you, and each volume of books of accounts which maintained manually should be by the registered person should be serially numbered. It should be consecutively serially numbered. Section 36 is one more important section which talks about for how long should I maintain books of accounts. You are required to maintain books of accounts for a period of 72 months. Accounts and records are required to be retained for a period of 72 months from the due date of furnishing annual return for the financial year. You will have to, so once you file the annual return from the, not once you file the annual return, from the due date of filing annual return for a year, from that till 672 months, that is 6 more years, you'll have to maintain books of accounts. And further what, sir? If you are a party to any appeal proceedings, advance ruling, revision authority, appellate tribunal, etc., in such cases, the books with respect to those particular year will have to be maintained by you for one more year from the end of the period, one more year from the end of the period of that investigation, revision, etc. Okay, this is with respect to accounts and records. Let us take a short break and continue our discussion. Hello friends, welcome back. Let us continue the discussion. Now the next topic for our discussion after accounts and records is what, sir? The next topic for our discussion is e-way bill. Section 68, one single section talks about this e-way bill. Nice topic, chota sa topic it is. So e-way bill means what, sir? E-way bill means electronic way bill. It is a document which is required to be issued by a registered person for movement of goods. For whenever there is a movement of goods happening whose consignment value is more than 50,000 rupees. So what are the different points with respect to e-way bill? Let us see in this particular slide. Okay, what do you mean by e-way bill? E-way bill is an electronic way bill. It is a complaints mechanism. It is what, sir? It is a complaints mechanism wherein by way of digital interface, the person who's causing movement of goods will have to upload the details of that movement which is happening before the movement has been caused. In other words, e-way bill is an electronic document generated on the GST portal evidencing the movement of goods. What are the benefits of e-way bill, sir? Digital interface will happen. Physical interface will be paved away with digital interface. There will be faster movement of goods. The turnaround time of trucks will increase, etc. Then, when is this e-way bill required to be generated? E-way bill is required to be generated whenever there is a supply of goods whose consignment value is more than 50,000 rupees, and this supply can be for reasons of supply, for reasons other than supplies, and when the supply is made to an unregistered person. Now, the registered person who causes the movement of goods will have to generate the e-way bill in the form GST EWB 0, GST EWB 01. This has two parts, Part A as well as Part B. Now, who has to generate the e-way bill, sir? A person who's causing the movement of goods. Sir, who causes the movement of goods? If the supplier is registered under GST law and he undertakes to supply the goods, then movement is caused by him. And if the recipient is registered under GST law and if he arranges for transportation of the goods, then he causes the movement. If the goods are supplied by unregistered supplier to a registered known recipient, then the movement shall be caused by that registered known recipient. Now, what do you mean by consignment value, sir? Consignment value means what, sir? Consignment value means the value of the goods as per section, the value determined as per section 15. To that add taxes under GST law, and if the value includes value of exempt supply, then please remove that value of exempt supply. You are required to generate e-way bill compulsorily if you are making a supply, if you are moving the goods for the purpose of job work to another states, and if you are moving the goods if you are moving goods to another states. Which goods, sir? Notified handicrafted goods by the person who are exempted from taking registration under GST. Now, whenever there is a bill to ship to case happening, how many e-way bills are required to be generated, sir? In case of bill to ship to cases, only one e-way bill is required to be generated. Either the either of the supplier can generate the e-way bill. Now, sir, what are the information which I have to give in e-way bill? Now, an e-way bill is given in form GST EWB 01. This EWB 01 has two parts, Part A and Part B. Now, Part A and Part B are the two parts which are there in this form GST EWB 01. Now, what are the information which are there in this? Part A consists of the details of GST and of the supplier and recipient, the place of supply, the place of dispatch as well as place of delivery, the document number, that is nothing but tax invoice, bill of supply, delivery challan number, then and e-way bill number, then the value of and it will contain what's the value of the goods or services, and it will contain HSN code and the reasons for transportation of goods. And it will also contain Part B detail. In Part B, it will contain the details with respect to transporter. What is the transporter document number, GRN number, RRN number, ABN number, etc. And what is the vehicle number if the goods are transported by road. Now, sir, when is it not mandatory to furnish the details of conveyance in Part B? You are not required to give the details of conveyance in Part B if the goods are going from your location to the transporter location or from transporter location to the consignee's location, and the distance is up to 50 kilometers. Then this is very important. They have asked questions on this point 2-3 times. Transfer of goods from one conveyance to another conveyance. Sir, what is the procedure I have to follow when the goods are transported from one conveyance to another conveyance? When the goods are transported from one conveyance to another conveyance, the consignor or the recipient of the goods who has provided the information in Part A or the transporter shall, before such transfer is taking place from one conveyance to another conveyance, he'll have to update the details of that new conveyance in part B of e-way bill. Okay. Now, uh, uh, you can either update the details or you can assign your e-way bill. You can assign your e-way bill to a new transporter. They may also assign e-way bill number to another registered transporter by updating the information in part B for further movement of goods. However, once the details of conveyance has been updated by the transporter in part B, now the registered person, the consignor or the consignee cannot update that details. Sir, can I cancel the e-way bill, sir? I have done mistake in preparation of e-way bill. Now, yes, e-way bill can be cancelled within the period of 24 hours. You cannot edit e-way bill, you cannot modify e-way bill, you can only cancel it within 24 hours of its generation. Now, if it is verified during transit, then you cannot cancel the e-way bill. That is also there. Consolidated e-way bill. So you can generate consolidated e-way bill in form GST EWB 02 if more than one consignments are going in a particular vehicle. Then, sir, what is the validity of e-way bill, sir? If the validity of e-way bill will be 1 day or 1 day for 200 kilometer or part thereof. So for every 200 kilometer or part of 200 kilometer, the validity will be 1 day if it is an over dimensional cargo, and the validity will be 1 day for every 20 kilometer or part of 20 kilometer if it is an other than over dimension, if it is an over dimension cargo. So if it is over dimension cargo, 20 kilometers, and if it is other than over dimension cargo, if it is other than over dimension cargo, it is 200 kilometer. For every 200 kilometer or part thereof, it is 1 day. If it is an over dimension cargo, that means very big trucks, then for that the validity will be for every 20 kilometers or part thereof, it is 1 day. I have written other than in both the cases. First case it is other than over dimension cargo, second case it is over dimension cargo. Extension of validity. Sir, can I extend the validity of e-way bill? Yes, you can extend the validity of e-way bill either 8 hours before or 8 hours after its expiry of validity. Now, this validity can be extended due to some specific circumstances only. Say, for example, there is an accident of conveyance happening, transshipment delay has happened, natural calamity has happened, because of law and order, there is no movement is happening, etc. Then, uh, this e-way bill which is generated by you, this is required to be accepted by the recipient within 72 hours. If he is not accepting, then it is deemed accepted. Now, other points with respect to e-way bill. Before that, we will see what are the situation when e-way bill is not required to be generated. E-way bill is not required to be generated when you are carrying LPG for supply to household, kerosene which are transported for ration shops, etc. You are transferring postal baggage or natural or cultured pearls and precious metals, jewelry of goldsmith currency, used personal or household effects, etc. Where the goods are transported in non-motorized conveyance, where the goods which are being transported are from customs port or airport to container fire station or inland container depot, where goods transported are alcoholic liquor for human consumption or HP man, where the goods which are supplied by you are not supplied as per schedule number 3, where the goods are transported in transit cargo from Nepal to Bhutan, that is landlocked countries, etc. And where the goods are transported by defense people, where the goods are transported by central government, state government, where empty cylinders are transported, and where you are transporting the goods for the purpose of being within a range of 20 kilometers. Now, the person who is in charge of the conveyance, he has to carry some documents along with him. Which are those documents that he'll have to carry? Tax invoice as well as e-way bill, and he'll also have to he will have to carry that invoice bill of supply along with the copy of e-way bill either in physical form or in electronic form. Now, what are the other points with respect to e-way bill topics, sir? When the goods are transported by railway, if you are transporting the goods by railway, the person in charge of that conveyance, that train driver is there. No, he need not carry physical copy of e-way bill, but the goods will be delivered to the recipient only when he submits the e-way bill at the time of delivery. And e-way bill can be generated even if the value is less than 50,000 rupees. If the consignment value is less than 50,000. Now, whatever e-way bill you are generating, no, this this will also help you in taking the information in GSTR when filing your GST returns. E-way bill once generated in one state will be valid for entire India. E-way bill will not be valid if there is no vehicle number mentioned on that particular vehicle. Okay. So once you generate e-way bill, you cannot edit it or you cannot modify it. You can only cancel it within 24 hours. Then e-way bill can be updated with the vehicle number n number of times. There is no restriction. Now lawmaker says they will stop you from generating e-way bill if e-way bill cannot be generated in following situations. What are the situations? If you're a composition dealer and you have not filed your taxes continuously for 2 quarters, if you have not paid the taxes continuously for 2 quarters, if you are a regular registered person and continuously for 2 tax periods you have not filed return, or if you are a regular registered person and continuously for 2 quarters here you have not filed your return, either 2 quarters or 2 months, then returns under GST law. Then returns under GST, there are different types of returns which are required to be filed under GST law. There are GSTR1 is a return for outward supply which is required to be filed by normal registered person. GSTR3B is a return, it is a summary return for making the payment of tax which is required to be filed by normal registered person. GSTR1 due date is 11th of next month and 3B it is 20th of next month. Now this GSTR1 can also be filed on quarterly basis. In such cases the due date will be 11th of next month following the quarter, and 3B also can be filed on quarterly basis for which the due date will be 22nd or 24th of next month following the quarter. GSTR4 is a return which is required to be filed by a composition dealer and the due date is 30th April of next financial year. Then GSTR5 is a return which is required to be filed by non-resident taxable person and the due date is 20th of next month or within 7 days from the expiry of registration, whichever is earlier. GSTR6 is a return which is required to be filed by input service distributor and this is required to be filed by 13th of next month. And TDS and TCS return are required to be TDS return is GSTR7 and GSTR8 is uh, TCS return. This is also both these returns are required to be filed by 10th of next month. GSTR9 is an annual return which is required to be filed by normal registered person and the due date is 31st December of next financial year. 9A, 9B and 9C are also similar annual returns. 9C is a reconciliation statement, but 9B is an annual return which is required to be filed by composition dealer and 9B is an annual return which is required to be filed by e-commerce operator who is collecting taxes and the due date is same 31st December of next financial year. Now GSTR 10 is an important return, final return. If you cancel your registration after cancellation of your registration within 3 months from the date of cancellation or order of cancellation, whichever is later, you will have to file a return called as final return. And GSTR 11 is a return which is required to be filed by UIN holders for claiming the refund of input tax credit. Sir, uh, is there any penalty which I have to pay, or is there any late fee which I have to pay for delay in filing of returns? Yes, you will have to pay a late fee. Now, this late fee will depend upon what is your turnover, okay, and what type of return it is. If it is a nil return, then the late fee is rupees 10 per day, subject to a maximum of 500. And if it is better, I show you all that part. Now, in case of GSTR1 and GSTR3B, what is the in case of GSTR1 and GSTR3B, what is the late fee? Sir, if it is a nil return, then rupees 10 per day, CGST rupees 10 per day, SGST, which is nothing but rupees 20 per day, subject to maximum of rupees 500. If it is not a nil return and if your turnover is less than 1.5 crores, then it is rupees 50 per day, subject to maximum of 2000. If your turnover is from 1.5 crores to 5 crores, then it is rupees 50 per day, subject to maximum of 5000. And if your turnover is more than 5 crores, then it is rupees 50 per day, subject to a maximum of 10,000. Then in case of GSTR4, if it is a nil return, rupees 20 per day, subject to a maximum of 500 rupees. And if it is not a nil return, then rupees 50 per day, subject to a maximum of 2000 rupees. And in case of annual return, the late fees will be rupees 20 per day, subject to a maximum of 500 if your turnover is less than 5 crores. And if it is between 5 crores to 20 crores, is 50 per day, subject to maximum of 2000 rupees. And if it is more than 20 crores, rupees 200 per days or 0.5% of turnover in the state or unit, whichever is higher, is the amount of late fee which you have to pay. Then the next topic for our discussion is payment of tax. We'll stop after discussing this topic. We'll stop this particular video, and next video will be uploaded wherein all the procedural aspects, the assessment procedures, the notices, refunds, etc., will be discussed in the next video, and along with customs. Then payment of tax. Payment of tax, very simple chapter. Payment of tax, section 49 and section 50 talks about payment of tax. Section 49 talks about 3 different ledgers and specifically talks about what is the interest liability for a delay in making the payment of tax. So there are three ledgers: electronic cash ledger, credit ledger, and liability register. Electronic cash ledger says every deposit which you are making under GST, whether it is a tax amount, interest amount, penalty amount, etc., that will go and sit in this electronic cash ledger, which is maintained in form PMT 05. And this deposit can be made, whatever deposit you are making, that can be made by you only through online modes. Over the counter, you can make a deposit over the counter only with specific permission, and maximum amount is 10,000 rupees. For making the deposit of money in the GST portal, that is electronic cash ledger, you will have to generate a challan in form GST PMT 06. Then now, if you have any excess balance left over in your electronic cash ledger, you can always take refund of that amount. Then electronic credit ledger section 49 subsection 5 talks about the manner of utilization of input tax rate. If you have an input tax rate, how can you utilize input tax rate? If it is an IGST credit, it can be used for making the payment of IGST. Then you'll have to use it first for the purpose making the payment of IGST, and then you can use it for making payment of CGST or SGST in any proportion. Now, first you are required to fully utilize the credit of input IGST. You will have to fully use the credit of input tax, the credit of IGST. Only then you can go to CGST and SGST. The credit of CGST should be first utilized for making the payment of CGST. Then it should be utilized for the making the payment of IGST. CGST can never be used for making the payment of SGST. Similarly, SGST will be first utilized for making the payment of SGST. Then you will utilize it for making the payment of IGST, but you cannot utilize CGST for making you cannot utilize SGST for making the payment of CGST. Now you can use SGST for making the payment of IGST only when you can use SGST for making the payment of IGST only when there is no CGST credit available for paying IGST. Then electronic liability register, if you see theoretically, if they ask any question, then it will be with respect to liability register. What are the different points? Now, what is the order of discharging the liability? First, you will have to pay self-assessed tax and other dues of previous tax periods, then self-assessed tax and other dues of current tax period, then any other amount which you are liable to pay under this act, including the interest or penalty, etc., under section 73, 74. Then, sir, your electronic liability register will be debited with what amounts, sir? What are the different liabilities which a registered person can have? A registered person may have to pay tax, interest, late fees for the returns which is filed by him, or he may have to pay tax, interest, late fees, etc., for the for the amounts which is determined by the proper officer, or he may also liable to pay the tax interest which is payable by him due to mismatch under 42, 43, or 50, or any interest amount which is accruing from time to time. Now, there are some liabilities which you are required to pay compulsorily in cash. What are these, sir? TDS under section 51, TCS under section 52, amount payable under section 10, amount payable under reverse charge, and your other dues, which is interest, penalty, late fee. All these amounts you are required to pay compulsorily in cash only. Then other points with respect to these ledgers are any extra balance which is there in electronic credit ledger or electronic cash ledger, you can will be refunded to you as per section 54. And every person who has paid, if you see, every person who has paid taxes on goods on services, it will be deemed that you have passed full incidence of taxes to the recipient. Any discrepancy which is noticed in electronic credit ledger or cash ledger or liability register, that will be communicated to you, and you'll have to respond to that. And for every debit and credit, there will be a unique identification number which will be generated. Physical challans are not allowed under GST law. Whatever challan is there, you'll have to generate it online only, and there is one single challan for all the different types of payment which you are making under GST law. Now, sir, what if I don't make the payment of taxes within the time limit? If you don't make the payment of taxes within the time limit, then you will have to pay interest under section 50. What is the interest, sir? For non-payment of taxes within the due date, the interest is at 18% per annum. From which date to which date, sir? From the date of actual, you'll have to pay the interest from the due date of making the payment till the date of actual payment, and that interest will be payable only on the net tax liability which is required to be paid by you in cash. Okay, on this excess input tax rate also, if you have taken any excess input tax rate, then also you'll have to pay interest at 18% per annum. Yeah. So this is all about this particular video. I'll meet you very soon in my next video, wherein I'll be taking care of procedural aspects and customs. Till then, keep learning, happy studies, all the very best for you.